Good morning. Let me see if I get everything going. Yeah, okay. It looks like I got the stream kicked off okay. Stand by 1 second. Okay, back to there. Sorry about that. All right, so anyway, good morning. This is my virtual trading journal, risk neutral trading philosophy, or methodology, I guess I should say. The first thing that jumps out is what the hell happened to the ETH session? Look at this stuff here, right up until London opened. And then again, this looks to be the Fed Williams speech. And most importantly, 87,000 contracts is all that's traded overnight. Definitely the lightest week, one of the lighter weeks of the year. All right, so this is my virtual trading journal. The idea here is that I stream what I see on my screens, and my voiceover provides indication as to what I was thinking. I'm not funded in any way or monetized in any way, so likes and subs would be great, and participate in the chat, obviously. Looking around here to make sure everything's cooking okay. It looks like the stream is working fine, and yeah, all right, good. I stream to YouTube so that I can monitor or review the streams on any device, and also to provide an extra layer of transparency and full accountability, which is really important to me with this stream because it's my journal, right? So who am I trying to kid? Who would I be lying to? You know what I mean? Crazy. This is it's not for financial or trade advice. There's a disclaimer in the description. And the idea here is to share everything openly and honestly and 100% completely transparently. And to, if that helps somebody else, great. Remember that this is my journal and I'm talking to myself. Let's look at the numbers, of which there are essentially none this morning to speak of yet. The only numbers out, the numbers coming out today is crude oil at 9:30, which is essentially nothing burger usually. However, the biggie of all biggies, all eyes are on Navidia reporting this afternoon. The little a quarter moon means after the close. And then HP and some others, but obviously Navidia is the most valuable company on the planet. $4.44 trillion market cap. Pretty amazing, huh? This is investing.com, which is completely free. You can set the filters up for your time zone and whatever else you want to have, what type of alerts you want to have displayed. And this is Financial Juice, which is also free. This is the free version, let me put it that way, of both of these. This is kind of the same calendar docket as is on investing.com, but then Financial Juice has a bit of a kind of like a squawk box deal over here. And this is the Fed speaking that these are the Fed comments, which from Fed Williams, which caused this and continuing here. So there's that. Okay, the pre-market now. Next on the agenda here, besides the issues around the house this morning is, or the office here, is my pre-market. Well, first and foremost, look at this pre-market. Now, these are the same tick Renkos. There's yesterday's RTH. Here's yesterday's ETH session. And here's today. Well, the IRT's playing hard to get here. This is IRT's. God damn. Sorry. This is IRT's overnight session so far. 1, 2, 3, 4, 5, 6, and in the process of 7 Renko bars in the entire overnight session. That's pretty, I don't remember ever seeing that. The sell-off continues pretty dramatically over here on Williams stuff. There's no news, so, unless we have the ever-present danger of random risk striking us dead, that's what we should be really afraid of today until the until this evening after the close, or after the cash close, when we have Navidia numbers. Here you see the so let's run around the horn here. This tab is the minis. Okay, so this is the mini ES NQ. This is my mini ES micro composite chart, which is essentially my high time frame. It is a day session only. And these, I'm sorry, it's an RTH session chart, and these are daily bars. I'll be right back. All right, where do we leave off here? Sorry about that. What's going on around here, but it's a lot of turmoil here so far. So, very, very light ETH session. We have been basically trading down the entire session. So, inventory is 100% light or short. In that configuration, I would normally assume we would get some responsive buying to take profit, but looking at yesterday's RTH session, pretty flat until the last little bit afternoon, and now it looks like we're sort of taking some of the profit off of yesterday. So I'm gonna go out on a limb and say I think we're going to be looking at an open auction here this morning. I'm kind of looking for direction. Back to the micro composite now. This is the daily bars. Wherever price overlaps, I draw a volume profile around them, and in so doing, it generates a micro composite VPOC and the high and low volume nodes, which I need to activate again here. I changed this around last night, so I need to kick these on. Apply, there you go. Now you see the high and low volume nodes, which will push automatically to Bookmap. And this is the market profile. Interesting day, interesting that Friday, or Monday, I'm sorry, or Friday, we had the big Powell speech, right? And the market just went to the moon, Alice, and left this big string of singles. Typically, when that happens, the consensus is we're going to get back into those singles and eat them up down to wherever it started and repair that big low volume area. Interestingly, what's happening is day before yesterday, Monday, we had a rotational day that repaired this much. Yesterday, we had a bit of a rotational day or a B-shaped profile, which is long liquidation, indicating long liquidation. We repaired down to here. Will we continue lower? We have now traded, this is that craziness up here at the top, but so that's where we are. This is our, see how light the volume is. We're under 100,000 still so far since last night at 1,700. Percent change is now negative. Percent change is, and total change is simply based on the last price as it compares to settlement. So there is that. And the session prices here also push to Bookmap. Bookmap. Well, and here we are. This is the micro composite column where I enter the flags and the MCVPOC and those things. This is the full session volume profile. And this is the column for the volume nodes, high and low volume nodes, and there's one. This is the RTH volume profile, and it is supposed to reset every morning at 8:30, and it seems to be struggling to do that, which is real frustrating. I don't know why. I've eliminated a bunch of, tabs up here for other instruments that I had. There's no apparent problem with ingestion and aggregation down there, so I don't know. This is my pretty important column to me. This is my notes column, which is where first thing I do is clear the notes from yesterday, like this. And then once this gets its act together with updating the session prices, which will happen momentarily, I hope. I don't know why it's doing that once in a while. I don't know. Anyway, there they are. These are the session prices pushed automatically from Bookmap. And then we determine the open type. And the first thing I do is change the title up here to the open type for the day. And how do you determine what that is? Well, it's real simple. It's if we opened right here, right now, where would that open compare to the previous RTH close and within the previous RTH range. Well, it is lower than the close, and it's within range. So it's lower in range. Yesterday was lower out of range. And there are only 4 types, right? 4 open types. There you go. Now, this dictates which of the statistics from that study in IRT I apply associated to the price levels, which are right here. There's no indicators on my book map or my IRT, and only the levels straightforward. POC, point of control, it just marks the price at which the most contracts have traded in the session. There's a VWAP for both RTH and Globex. There's a POC for both RTX and Globex, and there is the high and low volume. Let's see if I can find. There we go. The IB high and the IB low. Old market profile term, initial balance. What those 2 levels actually represent are the high and the low of the first 1 hour of the RTH trading session. Nothing more, nothing less. And this is the location of the POC from yesterday's RTH session when we closed. So what I do here is, well, my eyes is just killing me, this air quality, and I'm not having a good morning here, particularly. All right, and that is 260825. That's the location of the most recent naked volume point of control from the most recent RTH trading session. Statistics, they come from this study. Very simple. Only 4 open types. It looks back at 2,000 days. Of these 2,000 days, we opened lower in range, 590 of them. Of these 590 days, price revisited the overnight volume point of control 84.1 times. Oop. Overnight volume point of control, right? Ooh, come on. Right there. Let's get up there. There you go. 84.1. And that, boys and girls, is all there is to it. And then I simply go down the list. The next one is the overnight mid, and that's 83.2. And that went somewhere. Let's check if we can find it over here. Right there under settlement, overnight mid, 83.2. And next is the previous close at 73.4. Now you're going to notice something here. If we open down here, and here's our EVPOC at 84.1, we're going to get past 73 to get to 84, right? So you need to bear in mind that these are just probabilities of the times, or a statistic of the times that this price level was revisited by price in the RTH session, the current RTH session coming up, looking back over 2,000 days. There's not hard and fast lines in the sand or guaranteed levels or something like that. IB high, that's what I wanted, 70.3. Okay, I want to do this because I want to show you something here. 70.3. Now, why did I do the initials? Well, think about the definition. When the RTH session opens today, this flag is going to immediately move to the high of this upcoming current RTH session, and it will no longer be here. So I'll be wondering what the hell 70.3% was, and that's why I do that. Okay, what else we got? Overnight low, 6.9. 60.9. What do we got? Okay, now I'm behind the curve here a little bit, so I've got to get on to the next thing I do every day, which is the TLab snap. And what you ask is that? Well, it is. This is why my journal is this video type, because I don't multitask worth a damn. The TLab is a bookmap Discord chat room called the Traders Lab. Wow, there we go. This thing is really falling out of bed hard here. They're not liking that honesty from Williams. And also, you know, all the craziness going on with Trump and the Fed. And pretty soon we're going to have all our people in there. It's like, that is exactly what nobody wants to have happen. That's not the point. But anyway, back to the deal. The TLab is the bookmap Discord chat room called the Traders Lab. It's completely free. You do not have to even be a subscriber to Bookmap to participate and share all of the resources and everything else. It was started by a guy named Tom B. and continues to be led by him. And he is a professional trader with 46 plus years of trading. And I believe that he is the genuine article. He doesn't call trades. He doesn't show trade live. And you're never going to see, I don't imagine you're ever going to see his account, audited account verification. You're not going to see any wrapped Lambos or gold chains. I'm pretty sure of that. But again, the important part of the TLab, in my opinion, besides the quality of the content and his thinking, you're never solicited for anything. Nothing is ever, they're never trying to sell you anything. So what is the motivation there of Tom and the group? Or specifically Tom, is to try to help people. So I think it's worthwhile. And I agree with his, risk management policies and things and his strategy. So that's why I recommend it. And now I'm behind the curve here. So let's move on to being able, it's pretty important if you can trade on Bookmap, right? So the way to do that is you activate the trade control panel by clicking that padlock, and you select a way. One of the methods you will interact with the application to trade with your mouse. If you choose chart, the only place you can trade with a mouse is this active data column. If you choose dome, the only place you can trade with your mouse is the dome columns. And of course, both of them. You can trade with hotkeys in your keyboard, no problem. You just have to set them up and activate them. But you do have to have the focus of the computer on this application in order for them to work, which is absolutely normal for anything Windows. I don't know about Linux or the fruit stuff. I use multi-brackets. This is the heart of the system here. This is the risk-neutral philosophy or methodology, and this is the minimum package size. They need to be in even numbers because there's the package size, and then you select a stop size for the entire package. In this case, I've chosen 12 ticks based on my risk tolerance for the account, other parameters, the volatility, however you want to do that, that's up to you to figure that out. What's most optimum for your strategy? Once these two are selected or identified, the first risk neutral target is automatic. It's for half of the package, and it's for the exact same number of ticks positive as the stop loss would be negative. And then you have the runners. You can do 4, exactly the same idea. You can do high volatility 4, however you work it out. And these are just things that I put together. The volatility was back in April when, we were putting multiple tariffs on islands full of penguins, for Christ's sake. Pretty amazing. And this is the multi-account trading. So what this does is when I enter a trade on this screen, it automatically replicates that across the other 4 accounts. This is now a little transparency about that whole process here. This is a TopStep evaluation account. All 5 of them are. My thinking here in the theme of this stream with full accountability and transparency is this will be an absolute unedited, uninterrupted record of 0 to hero with that process. And I thought that would be meaningful to a lot of people, including me. Remember, this is my journal. Okay? The reason for that, and this is the base reason why the stream is so long. It starts every morning at 8 o'clock in the morning, as you are finding out here, and then continues on until the cash close at 1500 every day of the week. Absolutely no breaks. None of this crap where I'm in a loser and, the stream closes down after 2 hours and then miraculously the next morning when the stream opens up, I got back online in the afternoon and I made all that back and then another umpteen gazillion dollars, I listened to one particular guy who comes to mind that used to do that on a regular basis. He's now the big front man, a big front man for a prop firm, Apex, actually. Watch that. Be sure you just kind of look at all these guys, including me, but look at all these people with a critical eye. Here we are. We're trading down here to the lows again. Remember that these are all dynamic, right? They didn't like this Williams thing, the repositioning. Also, we're just approaching the value area low. We're going to open in about 2 minutes. So to finish up the bracketing and how that all works, after I've said everything, I confirm the bracket size here, and then I click this padlock again, which closes the trade control panel, and I get that real estate back on the screen. Notice that these parameters, these data points here, are the same as up here. So when I close that, I have the exact same data to view. Plus I have cancel all and close all. And I don't, because I use multi-brackets, I don't need this information or these tools down below here, OCOs and brackets and all that. So that's why I do it this way. There you go. Wow, they're just selling them off like crazy. And we're going to open in half a minute, and then I'm going to start bitching and moaning because this is probably not going to reset properly. But let's see. Let's, fingers crossed, think positive. Center yourself. Think positive. Don't tell yourself or verbally reinforce negative thoughts and ideas. And good luck. Be patient. And here we go. There is the open, and we didn't reset. Really irritating. It's not even, it's supposed to reset on double click. It's not even doing that. Boy, and there's no ingestion problem. There's no lags. There's no lags on IRT. There's not a high, we obviously know there's not a high bunch of data coming through. So this is strictly an issue with Bookmap. And that's frickin' frustrating. Sorry for my French, and I will start marking the, putting in these migrating VPOC flags, and I will set my marker here for my session open, which I do like that. This blue line is nothing more than a visual cue. I want to keep the entire session in view throughout the day, unless I'm getting ready to anticipate interacting with the market, in which case I would, in which case I would then zoom in, right? So the reason for this blue line is, let's see if we get right where we need to be. The reason for this blue line is I can just glance left or even in my peripheral vision. If I see that blue line, I know I've got the whole, I know I have the session in view on the chart. Well, there's our open. We're jumping all over the place here. We'll continue to plot these. These flags are not as important anymore as they used to be. I used to stay zoomed in all the time, and so I would not be able to see where this yellow brick road had been. Pretty soon it'll scroll off the left of the screen. Now that I keep the entire session in view the whole time, these are not as necessary. And also, I always have the developing value areas. Developing POC is always on my IRT. Now I need to change IRT from full session to day session or RTH period. And I do that, it's real tough, right? There you go. Now, I also have a similar set of tabs or layout specifically for the micros. Come on, what's going on there? God damn, this thing is irritating to me. This computer, I don't know what to think here. I don't know whether the RAM is going bad. I build my own trading machines. I hate to complain all the time about this, but anyway, it's just irritating. And after all, who am I talking to? I'm talking to myself, basically, really. It's my journal, right? So I build my own trading machines, and this thing is basically the top of the line I could get when I did it. The GPU is now, a couple of generations old, and I think part of my problem, but this is a 12900K i9 multi-core Intel processor with a Asus high-end motherboard. And 64 gigs of DDR5 RAM. There is no flipping reason on the planet why this thing ought to be choking and stumbling around, in my opinion. What I'm going to do, I think tomorrow, I'm going to add another column here, even though it'll screw up my plotting. I'm going to add another column and remove this one perhaps, add a replacement column and see if it's some sort of a stuck marker or just some sort of a fumble in that particular column, because everything else works okay on Bookmap. Just that volume profile, which happens to be something I'm focused on, obviously. So here we go. Now we're just cruising through some of our stats. We actually got down to a low of Billy the Bad Pig didn't get down there to there because here's our overnight low. I've got my new stuff. The reason I changed my charts from full session to day only is only for the benefit of the value area high and the developing value area high. The developing value area high and low are for the current RTH session. The value area high and low are for the previous auction. So through the overnight, this is correctly representing the previous yesterday's RTH session. But once we open, suddenly the previous auction is the just closed ETH. And I do not want that to represent this. So I changed my charting in IRT to day session only. Now this continues to reflect the previous RTH session accurately. And I share all these levels with anybody freely that wants them or needs them. They could help. Morning, Antonio. Did you see the overnight? Wasn't it crazy? Less than 100,000 shares traded or contracts traded all night, and hardly, there's like there were 6 Renko bars. Pretty crazy. This big sell-off, this big drop right over here was Fed Williams. Fortunately, those guys are holding their ground against all the the onslaught of irrational people from the other side. But that's what happened here, and otherwise we were just flat as a board all night. So, yeah. There you go. All right, where am I now? I don't even remember anymore. What am I doing here? TLab. Minus, I don't know, a few minutes. Going on here. Okay, let's see if I have everything happening correctly, and I'm fingers crossed, I hope so. We're having that migration north. So we're kind of getting our our open auction as I was suspecting. Not that you never want to try to predict anything in the markets. It is a random environment. That is a frustrating and losing idea. In my opinion. What you want to do is approach the markets as a random environment and think about it in terms of statistics and probabilities, and identify as a setup and criteria which you can capture a data set and determine if there's an edge or expectancy or whatever you want to call it, and then trade that and let the law of large numbers manifest to your account. That's the technique, I believe. And it's also a statistical fact that the outcome of the next trade, or the probability of the next trade, is 50-50. And that hangs up a lot of people because they succumb to the gambler's fallacy, which is, we've had, 50 reds in a row. The probability of another red has got to be a negative number. No, it's 50-50. If that's what if the roulette wheel's got an even number of reds and an even number of blacks, then it's 50-50. This is 50-50. It can only go two ways, one up or down. Horizontal movement is what we put on it with time. It's essentially a coin flip in terms of probabilities and statistics. So let's see, we're a point high here. And we've got the whole session in view. And oh boy. No numbers or anything particular this morning. We do have the crude inventories out at 9:30 as usual on a Wednesday. But all eyes, much like the Fed Powell speech on Friday, all eyes are on just after the cash close Navidia reports earnings. $4.44 trillion market cap. Jesus. I can't even get my head around $1 trillion. I don't know how, Trump has decided that the government will take 15% of everything they sell in exports. That's interesting. Got the soldiers marching the streets. I'd say this place is, day after day, this place is starting to resemble a northern European country around the end of the 30s, and I don't think it's a good thing, my opinion. So let's run around the horn here and see where the hell we are. We're on the right starting. That's a good thing. See where we're basically getting just a rotational open here. This was our flat overnight, and then they traded right. No, I'm sorry. This is yesterday's RTH session. Get over here, you little guy. Oh, there you go. This is yesterday's RTH, and then the last little bit came in through here. We are just barely. How can that be? That didn't make any sense. Oh, yeah, I guess it does. We're just barely green. The green, red, determined by the last price as it compares to settlement. This doesn't seem like much, but it's a big psychological deal somebody figured out for all the retail, the Robin Hooders and all those kind of ninja trader people. When they see their screens go red, they start hitting the sell button, and the other way around when it goes green. That's got a big psychological factor, I believe, or input, import, I think. We'll see. Market profile, here we are. Now we have opened back up here, thanks to the overnight. Let's see if this will be quite a stretch to trade down here. Now, I was talking in the pre-market about, this is our famous Fed Powell speech. Big string of singles. We're going to the moon, Alice. Typically, you would expect in market profile that once you got into those string of singles, you'd eat them up down to wherever they started, and to repair that profile. Because in market profile ease, this is this profile needs repairing. It's no good here like this, like a weak high or a poor high. Same idea. We didn't do that, but day before yesterday, we had a fairly balanced day and essentially repaired this mini. Yesterday, we started out being pretty well balanced until at the close of the day, and we repaired down to here. I was kind of thinking we'd probably, so these are essentially, the value is essentially overlapping to lower, would be how they talk about it in market profile stuff. That didn't continue today. We're up here now, again, rather than down here. What are they going to do? I don't know. Who knows? Here's our micro composite. I simplified this. It was too confusing. I was trying to align with basically with what Tom had been up to. And I think I need to do something right here, right now. 6468.5 is the micro composite VPOC right here. And let's see what we've got for naked volume points of control. Okay, we got one below us at 6456. Okay. So here's our micro our naked volume point of control below us down here at 64.56, and then we've got 64.68.5, and that's our naked volume point of control, which I'm assuming is going to be this high volume node. And isn't that amazing? How does that work? Love it when a plan comes together, eh? 26, 25, oh, nope, 26, 25, 25, and I'm all goofy here. 26. Oh, Jesus Christ. I'm going back to bed. All right, there we go. That's our naked volume point of control. Micro composite volume point of control. We have a naked volume point of control down here, just in dailies. And these are some important levels up here. This is the all-time high put in on the 13th in the RTH session. Not to be outdone, the London boys jumped over the top on the 15th and put in this all-time high, just above 65, in the ETH. Now, these RTH people typically can't stand to have ETH hold a record, especially an all-time high or low. I've been amazed we haven't gotten up here and tagged this one out yet. We did that several times in the last couple of weeks where these guys were just playing leapfrog. So let's see what happens in that regard. Okay, shut those volume profile or naked volume points of control off. And get that down there. And I always save because I'm OCD. Thank you very much. There we go. Back to where we started. Now, let's get this off of 3 points or 2.5 points up here and get it back to about 1 like that. Look at all this liquidity bobbing around down here. That's kind of different, isn't it? We had some pretty big liquidity down here. I don't know if you noticed that. We've got 337 up here at 87 right now. Last night yesterday, late yesterday evening, we had 600s and 700s living over here. Pretty big lot size. This can all be controlled, of course, by your settings for the heat map. I try to keep it as clean as I can because I don't want to get confused. Some people have a lot of stuff, all the colors and balls and stops and sweeps and levels, and I can't even remember all the different things. And when they post a screen snap of it, I'm really glad that it works for them. I can't even see where price is. So that doesn't work for me. That's why I keep it pretty plain and pretty simple as I can here. And, you know, whatever works is the thing to do. This stream is certainly not intended to be my way or the highway. In fact, I wish I could trade like these guys that trade on TopStep X or whatever with no volume, no indicators, no nothing, and they make money. That would be great, wouldn't it? I'm paying money for all of this stuff and commiserating about this and that and something else, and watching this and what's that VPOC doing? Is this flag okay? And all this kind of stuff. And these guys are just kind of sitting around there yucking it up, listening to the music and making money, And after all, that's the goal, I guess, isn't it? Just to make money. So I admire them. I can't say that I envy them. I guess I do in a sense because I wish I could do that. But I guess if I think about it logically, I don't wish I could do it enough to do it, to learn and do it. And I believe that if anybody can do anything, so can I. That's a fundamental belief I've had all my life. Knock wood, it's held up. The only real big stumbling block I've had along that line was trading back in late 99 when I thought I was going to be a trader because I recognized the opportunity and, all the associated benefits. But I didn't know, come here from Sikkim about it. And I thought I was going to be a red hot trader because I'd been good at anything else I tried. And I promptly lost my ass. Granted, it was a perfect storm because I was long going as I sat and watched the airplanes run into the World Trade Centers on CNBC. And that was not a fun couple of months there. So here we have the overnight high, the overnight low. We haven't tagged out either one. Our IB seems to be not working correctly because the IB, oh yes, overnight low, I'm sorry. Here is the low and here is the high of the first 1 hour of the RTH session. So that's all right. You see what a useless, limp, pathetic overnight we had. What was it? Jesus Christ. 72 to 89. So 15 handles all night. The most amazing part to me was we weren't at 100,000 contracts yet this morning. Oh, that brings me up to, let's have a look at volume. Well, better than yesterday. 75%. Yesterday we were down around 64 going into the close. In the morning we were up in the 70s. So this is relative volume at this time of day. And, you know, I'll make my standard plea every day for this is harmonic rotations, and it's an accurate and comprehensive study showing the count, mean, median, and mode of each. And I watched this to try to figure out how I might be able to best apply or to refine my stops on the brackets. But I can't quite get my head around it. So if anybody's got a great idea about how to use that, let me know. This is kind of surprising. Now, the last few days we've opened, well, here you go. We've opened way up here, around 6-7 handles of ATH, actual true range. Now, on this open, we're down here about 275, which means our 3-point scale is within reasonable limits. Okay, let's check and see if I've got everything done correctly here. These are the this is the micro tab. It's the exact same setup as the minis, but it's the micros, and we'll get that shut off. Okay. And TLab we've already talked about and looked at, and the statistics, etc. One thing that I don't think I pointed out yet, and maybe nobody cares, this black volume profile over here is all of the data. And it is for the ES, obviously not the U5 because it's, you know, the ES rolls every 90 days, but this is the continuous contract for the ES going back to October 25th of 2021. And that historical data is really accurately provided and updated by DTNIQ feed. Okay. So we're just kind of, open auction. Up, down, boop, boop. Now, if you look at this on the Renko charts, it kind of looks like we've got higher highs and higher lows, right? Maybe suggesting context is moving higher. If you look at this over here on the book map, a little bit higher lows, higher highs, and flattening out. There you go. This is, much as I hate to say it, a day where we could just be making retail soup all day in anticipation of what the hell Navidia is going to say. I'm so sick of doing this, I can't even see straight. One other thing to mention here is that seasonality-wise, this last week or two of August is the lowest volatility, trading, mushy, useless 2 weeks, only outdone in uselessness from a trading point of view of the Christmas and New Year weeks. Real low liquidity, low volume, big nothing burger most of the time. However, it's important to understand then that the reason we trade the ES is because of the liquidity. It's a liquid market. You have no problem getting in or out of trades. It holds levels pretty well. It doesn't go skidding past or, slipping and sliding all over the place like the snake, the NQ. And the reason it trades the way it does is it's a much less liquid market, higher volatility. So in a case like this week and last, you need to be careful about the ES because when the liquidity is low, this can be like this, where it basically does nothing or overnight, or if some input does come in to disrupt the auction, there can be a pretty violent and volatile reaction because there are so few contracts to get through. And that's all. That's the way this whole thing works. Remember, it's a random market. Outcome is 50-50. And think about it. Well, there's 417 contracts. And what have we got? Basically 50s across the whack down here. So it would take 8. If this 400 offer comes across and hits the bid, we could take out 8 price levels to fill that 400 lot contract. That's how it works, as I understand it. Remember, this is my journal, and that's how a liquidity vacuum or a stop run, more of a liquidity vacuum than a stop run, but that's how they work. It's when an order comes in that's large enough to take out several price levels on the other side of the inside market. It's not, nobody's really got a secret message watching every trade you make and hunting your stops. It's because you put your stops in areas where there is other stops and the market is going to liquidity. So there. It's my story and I'm sticking to it. There you are. Yeah, so I did get the, I don't know if I mentioned this yesterday, but I got the TopStep drama sorted out with my Combine account, or my 5 accounts, the 2 that they had closed incorrectly rather than rebill. So I do have 5 accounts, all within one trade of passing the evaluation on to the XFA, where I can continue to trade those 5 or copy to those 5 and withdraw money, payments, or whatever you call it. And then when you go live, it's only one account, but so that's the point of doing this sim farming idea. And I thought it was a real, chicken shit thing to do. But then somebody pointed out to me that I was stupid. They were right. If somebody wants to pay you for sim profits and you can have 5 times those profits, the same as if you had one account, who's stupid, right? Obviously, they're betting you're going to crash out on them, and they are trading and playing or using probabilities, just as we should. And therefore, I said, you're right, and I got those 5. So, and I've been very fortunate to have no issues, and those are all 5 within one trade of crossing the big divide. And that has been a real lesson in patience and sticking to your process, because this has been the case now since before the 1st of the month, before the 1st of August. I haven't traded because they needed to get this straightened out and all this craziness with the market. I haven't traded. I have been involved in the third position, which is long, short, and flat. In addition to that, I'm vetting the IB trades. Timing's probably not good for that, but and I'm sticking to it. One thing I don't have a problem with now, which I learned the hard way back in the 90s, late 90s. I don't have a problem over trading or discipline or any of those kind of things. I think it's all part of growing up. All a part of growing up. And if you think about it that way, I believe this. Remember, this is my journal and I'm talking to myself. I believe that if you approach the psychology of trading the way I just mentioned, it sort of is a non-issue anymore. I'm not sure if I said that very well, but all these people like Steenbogger and everywhere you go, they're talking about how, trading psychology, it's 90% of trading, and yet. How are they making their money? Selling books and courses. Telling you that trading psychology is really tough. Feeding into the monkey mind of FOMO and overtrading and all those kind of things. And then they get traders going, I just can't control myself. I don't know what to do. I don't know how to. People send me emails. I don't know what to do. I just can't control myself over trading. It's like, what the hell is wrong with you, dude? You're a grown up. You've got a career and a family, and you're a grown up. And what do you mean you can't not overtrade? Come on. That's like saying, I don't know what to do. I just can't stop going to the bathroom in my pants. I mean, it's just stupid. You're an adult. And I really believe if you look at it that way and keep that perspective, that helps a hell of a lot. And it's also important to realize on this psychological rant here that seeing why I have to do this, I can't talk and type at the same time. I was trying to type a impromptu timestamp in for the stream here, and it doesn't work. Anyway, back to the psychology rant. So I believe very strongly that your subconscious mind manifests what you tell it. It believes you. If you spend all of your day telling yourself that you can't control yourself from overtrading, your subconscious mind's going to go, well, yeah, okay, cool, let's overtrade. If your subconscious, if you just adopt the mentality or the attitude, I don't do that. I'm patient. I'm going to wait till this setup presents itself. You will. Our monkey mind, and as Tom would refer to in the TLab, Hyde, Jekyll and Hyde. Those things developed over hundreds, thousands of years of evolution. Kept us alive way back when. You see the grass moving, you don't go kick the grass, you don't seek risk, you don't go kick the grass because you're liable to end up lunch or something. So fear, FOMO, greed, the desire to win or be right, to confirm that you're right, give you a sense of security and a sense of whatever they call it. Those things are baked in, and they're never going to go away. These people that say, eliminate this from your psychology, from your thinking, you're not going to eliminate anything. That's like saying I'm just not going to react, or I'm not going to be attracted to a good-looking whatever you find good looking in your, opposite or your personal and sexual world. It's never going to happen. But what you can do, very definitely, recognize that thought, that emotion, and don't react to it. You recognize FOMO. You don't just start clicking the mouse like you're killing snakes. You see a really good looking gal or guy, whatever. You don't run over, knock them over the head and rape them, you use restraint and common sense. I mean, it's the same thing. I think if you apply those patterns and habits and ideas that have developed in us so that we fit into society and apply that to trading, I think it just gets rid of 90% of that big drama about trading psychology, in my opinion. And that's just me. But I will say that in the course of my life, I've never had a big problem with willpower or self-control. And I know from experience, I do not have an addictive personality. So maybe I'm just lucky. I don't know. But that's my thoughts there. So needless to say, I'm just ranting along here because there's nothing to do. 9 o'clock, 9:08. If you're new to the stream, just, throw in a thumbs up or a say hi, where are you and where you are in the world or whatever in the chat. If you think I'm full of crap, say so. That would be great. Antonio and I get lonesome talking to each other here. That would be great. Remember that the stream is my virtual journal. It's completely transparent and offers full accountability. And that's one of the reasons that I start with the pre-market and analysis and reports, etc. At 8 o'clock every weekday morning, every trading day morning. And it goes until 1500 in the afternoon. It's 7 hours. I'm standing here the majority of that time. These are stand-up desks, and I'm an old man, so, if I can make the effort, so can you. Let's see here. Where are we? What are we doing? Maybe it's time for music already. This market looks pretty boring, huh? Let's do some. I got to listen to all of these different things at some point. We got some different ones, but for now, I'll just stick with these playlists. Just running around the horn again here. This is the investing.com, which is my preferred source for reports of the economic calendar and earnings because it's clearly less cluttered, easy to take a screen snap, got the, when did I do it, what's the date, all that stuff. Easy to filter out, and this is free. I'm sure there's a paid version if you want to do that, but it's free. The other one I use is Financial Juice, also free. Of course, about every second screen, they remind you that you can pay them for it if you want to. This is kind of the calendar, much as is on investing.com. But it has more of a squawk box feature over here on the right. So that's kind of why I look at both of them now. And obviously the entire market is holding on this one right here, which is the Navidia Earnings, and they come out this afternoon after the close. And another thing I like about investing.com is the earnings calendar. You can do it daily or weekly or whatever you want. There you go. I wonder if CrowdStrike's going to break all the airline stuff again. Morons. And something to be aware of here. In our thinking, in our trading, is random risk. Unrecognized or unexpected critical risk. And that's what we are experiencing on a much more frequent basis now than ever before in my memory. All around the administration and those few folks that are real fond of the sound of their own voice and definitely love the camera. Nothing wrong with that, but if you are a project manager or any kind of a business owner, one of the first things you do after you get things off and running and resources assigned is you identify risks to your project or to your business. Potential risks, and then you come up with a mitigation plan, or what are you going to do if that presents itself? What if this, then that, if not, then what? That's a Thomism there, but it works. However, if you have an unscheduled, unknown critical risk potential, there's no way you can mitigate for it. So you have to really step up your risk management and limit the amount of times you put risk on and expose yourself to risk in the market. That's my opinion. And that's the opinion of, I should say that I agree with that opinion, which is the opinion of the most successful hedge fund and traders in the world. So there you go. And that unknown critical risk is, as I said, with who knows what Trump's going to do on Truth Social or whatever, or anytime he's walking to somewhere and passes by some reporters, he's liable to drop some, Trump bomb that just craters things. Who the hell knows? And nothing. And I'm not making any political statement. It's a fact. You don't know what any one of them are going to say when they get in front of a camera or a microphone, and it could have, as we saw in April, a dramatic effect on the market. So it's a unknown critical risk potential. Limit your risk exposure to the market. Absolutely always have stops. Use the bracket orders like I described in the pre-market is my suggestion, or a version of them. Never move your stop away from entry. And remember about stops that they are, when price gets there, they're a limit order. They become a market order. Meaning that they, by definition, will be filled at the best price possible. And that could be, depending on the risk or the event, could be 20 handles lower than you thought it was going to be. But at least you're out. You might have blown up your account, but nothing you can do about that. Which loops us around to, in my opinion, the fact that you need to approach this as a business of probabilities. And I'll get into that in a little while here. We're going to trade out the top, it looks like. Or at least we're pushing it a little bit up here. We haven't gotten to the ETH high yet, as you can see. But we're getting close. We've tagged out the 73. We've tagged out the RTH, the ETH VPOC, which is the highest, typically the highest one. We've tagged out the, have we? Yes, we've tagged, no, we haven't. Doesn't look like we have. Yep. No, we haven't. We're one tick away from the mid, and there's the close. Now, I haven't put statistics in for the overnight high and whatnot. Should have done that, I guess. Remember that we can go over here to the statistics page, and after the open, IRT conveniently highlights the correct open column. So if you're, I mean, how can you, it's such a simple methodology for determining the open, and there's only 4 options. I don't think it could be very confusing, but in case, it's, there they are. So the overnight low is 66.8. We got that in there. I got 9. Okay, call me a liar. And the overnight high, where'd that go? Overnight high is 51.9. So let me throw that up here. I'm only doing this for the sake of the stream and the record. Everything here is recorded in 2 places and remains forever. Wow. We're close to that, I guess, as long as I'm doing this. The previous RTH high, what was that? Previous high, what was that? That's pretty funny. 39.9. The previous high right here is 39.9. Probability, which should lead you to realize that these are just probabilities of the number of the percentage of days that this price was revisited, looking back over a 2,000 day data set. Obviously, if you're going to get to 39, if you're going to get to 51.9, you better get past 39.9, right? So, and we already have. So there you go. Need to keep all of it in perspective. There's not hard and fast lines in the sand, and you see down here at the previous IB high. See why I put that initial down there? I know what 70.3 means. What that's there for. And I think I think these guys are eyeing up here is what I think they're doing. And would not surprise me if Nvidia has good numbers, I would not be surprised in the least if we didn't put in a new all-time high in the RTH session. Now, that they would have to hurry because they report at just after the cash close, but before the ETH session opens. That would be, I don't know the probability of that. That would be an interesting statistic to know how many, if any, all-time highs or lows were put in after the cash closed, but before the 1600, So in other words, between 1500 and 1600. I have no idea. I know that they're sniffing it now, and they're seeing this 6,500 up here with only 198 contracts. No big size. Well, here's 349 sitting down here at 68. There's 86 half. Dyslexia is a wonderful thing, isn't it? Okay, let's get on about the next thing I'm up to, which is here's an iceberg. This is interesting how, this is how icebergs are represented graphically and bookmap, which is pretty cool. You can turn this off or on, but that iceberg came in the market right there, and they have been holding to trade out 8 contracts, which obviously there's a lot more living somewhere up till now. So we are banging around on the IB high. Here's the IB low, but we know that the IB high or low are not a statistic yet, nor has that been set, because they represent the high and low of the first 1 hour of the RTH trading session. So until 9:30, this one will keep going up and this one will keep going down with price until 9:30, at which time they set, they don't move anymore, and the IB statistic is in play. That is a well-known market profile statistic, or at least a statistic from back in those years, that it's greater than 97.7% of the time of the days, looking backwards over 2,000 days, that the IB high or the IB low is exceeded by price in the balance of the RTH trading session. So after 9:30, this quits moving. Sometime between 9:30 and 1600 actually, this IB high will be exceeded or the IB low will be exceeded. And if you don't think I'm lying, here you go. IB high or low, 97.7, 98.2, 98.1, 97.9. In our particular open type today, it's 98.1% of the days of 2,000 days. In other words, 530 of them. We opened 591 days lower in range. Of these 591 days, 580 of them we took the IB statistic. So yeah, pretty common, huh? Just out of curiosity, the IB high and IB low is 32.8% of the time. That's where we take them both. And the statistic I particularly like is 1.9% of the time of the days over a 2,000 day data set, we didn't take either. So there's different ways you can approach trading it, but what I'm doing now is vetting the IB trades. And vetting is approaching trading as a business of probabilities, not video game, gambling, throwing darts, whatever. None of those things are bad if that works for you, but in my opinion, this is the way to go. So, what do you do? How do you do that? How am I approaching that? I started with the IB statistic, which is, and the reason for that, there are 2 trades. There is the IB continuation trade, and there's the IB failure, which is a mean reversion. So that gives me once this is concluded, it will give me a vetted setup or trade to take in either environment, a directional environment or a rotational environment. As opposed to, for example, had I started vetting the mean reversion trade first, which is outside in, but there's no provision for directional. So there's that. And what I do then is, first, I don't have any opportunity to consider a trade until 9:30, so I'm just watching the market, keeping my head screwed on with context and those things, hopefully. And then when I anticipate perhaps interacting with the market and trading, I can zoom in, look for the trigger and the stop. So what do you do to vet a trade? First thing you do is identify your setup, which I've just described, IB high or low, IB failure, or IB continuation. Then you capture a data set. Next thing you need to do is determine the parameters which qualify that entry, and hopefully a trigger, so that it's kind of could almost be mechanical. Then you capture a data set that is large enough to be statistically significant and outside the probability of random distribution for that exact setup and those criteria. Do the math. If it has a positive expectancy or edge or probability, whatever word you want to use, you take that trade whenever it presents itself in the live market, and you rely on the law of large numbers, probabilities, to manifest that edge to your bank account. That is the methodology of the most successful traders and hedge funds in the world, from Thorpe to Jim Simmons, Dalio, Paul Tudor Jones, Tom Sosnoff, and the whole tasty thing. Down more towards our level, the Tom the trader with Best Loser Wins, and Tom B at Traders Lab, and some of the successful people in there like Rod all do the same thing. It's all the same idea. They've all recognized that that's the way you approach the market, because it is a random environment. Also, something that's important. Never mind. So that's how you do it. And what I'm doing is I'm trading working on the IB stats. One of the things that's important to remember when you're doing the vetting process, everything has to be the same, identical. You can't have a 5-tick stop this time and a 3-point stop the next time and a 5-tick something else, T1 or T2. They've got to be the same. Otherwise, they're not in the same data set. They're not statistically significant. You can't say what is the probability I will achieve T1 over 1,000 trades if T1 is all over the board. You can't do that. It just doesn't make sense. So think about that if you're going to try this, which I think is the only way to go. And also be sure that you capture enough data points to be outside typical random distribution. I mean, if you flip a coin, which we all agree, I think, is 50-50. If you flip it 10 times, you're liable to have 8 hits. Perfectly normal. That's random distribution. Same way with trading. You might have, 5-6 losses in a row. But you flip that coin 1,000 times and it starts narrowing into 50-50. And that's the same idea. This is also, by the way, the business model of a casino from the point of view of the house. They play no game for which they have not established a hedge or a probability and specific rules. And on the casino floor, their only mission is to just play that game as many times as they can without emotion. They know gamblers will win, but they also know that that the key is to increase the sample size, and then the edge exponentially manifests to their bank account and becomes exponential. That's it. There you go. Now we have achieved 9:30. Huh? It's 9:30 and 54 seconds. The IB statistic is hot. And let me put a real important caveat right here that I learned the hard way. Do not trade to the statistic. In other words, wait for the statistic to be set and then the criteria to develop. Okay, baby, we're above the POC, we're above the mid, we're above the VWAP, we're above these levels, and I think it's gonna take the IB high, and you go long down here, and then it immediately goes the other way and stops you out because of this big iceberg up here, for example. That's trading to the statistic, and something I learned absolutely the hard way. Do not do that. And I'll say right from the get-go that in this environment today, I'll be really hard-pressed to trade because of the light price action, and I think that this is a heightened interacting with the market in this real fluctuating environment is a heightened risk, and I am at a point where I don't want to put that risk on unless I'm relatively you're never going to be sure you're going to have a winning trade, but I think that I want to have the probability as much in my favor as possible because I've got that one more trade to get, and then I'm in a different world. Here's a perfect example of trading to the statistic, right? You got long right here because you're going to take that IB high, and that is 91, and it's traded down here to 89, and you're almost stopped. No scale. Bad idea. Happens a lot. Way more than you would probably imagine will do this and then take the IB low. In this particular day environment with the directionality that we're going in the context, I don't guess that's going to happen. And this is a quiet news and reports day, but there's a bunch of action with the random risk band. Agent Orange and the random risk band are on the stage. So there's all this dust up with Fed Governor Cook and lots of people weighing in on that. There we go. So there's the IB statistic, which has now been taken to the top side. So our 97.7 in today's case, our 98.1% probability has been satisfied. It's past 9:30. We've taken the IB high, traded right up to this 93s here where we've got 336 contracts living. And what will happen now? That's the question.
Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o seu calor. Sei que tá
Well, this price action would suggest
já sei como sei que o nosso
what would it suggest?
amor aquece quando
I was gonna say the IB failure, but basically the profile and so far the context is directional, and that would be IB continuation. This 350 and 93, they seem pretty invested in holding that level.
deixa de preguiça, deixa cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá
Well, we're pulling back now in volume. We were around 74 or 5, I think, if I remember right.
sei que o nosso
This, by the way, is open interest.
amor aquece quando quer.
You can read what they are, so I don't need to explain, I don't think.
O sol nasceu.
Oh, what was it? I forgot to look at the ATR. What is it doing?
Deu esperança de
Oh, it's come way up. It was down here at the open. Now we're up over 4.5. 4.25.
tanto tenho a dar.
So just looking at the day here, what do we got? Well, we got context. Is not a hell of a lot of question about what's going on.
Pra fazer o frio evaporar.
And we're bumping our heads up here on the big Fed high over here. And the world famous all-time highs, which I have commented about enough, I think. So all of these would be pretty good signals for a IB failure trade, mean reversion. Having said that, then, in my world, there's a thing called range requirement, which basically is as follows. If all of the setup criteria is right, the final, go, no go decision can be boiled down to the range requirement. Maybe this is just rationalization on my part, but it is definitely something that's discussed and deemed to be valid by a lot of traders. Tom B, for example, and Rod and those guys simply says this, that there needs to be an unobstructed path from the proposed entry to the first risk neutral scale, or first scale, which is risk neutral. Meaning that if I were to get in right here at 91.5, I've got to have 3 points down here to get my risk neutral scale and have no obstacles in the way. Obstacles being any of these price levels or lines or recognized levels where the market can be expected to react. Now, nope, let's just wind it back down to the 1-to-1. There we go. So if we were to get in up here at 92, we got to get down to 89 to scale. And there's a level right at 89, developing value area high, and quite frequently. And that's also the overnight high. This is kind of handy, this indicator that you buy from Bookmap. It actually displays whatever labels are there at that level, as opposed to the flag. Kind of nice. And these levels for both this indicator and my session prices are pushed automatically from Bookmap to Bookmap from IRT. And I share these with a lot of people, so if that would be handy for you, let me know. And, subscribe, like, put something in the chat. We'll make a plan. They're live 24/7 from 15 or 1700 on Sunday night until 1500 on, actually 1600 on Friday. What? So counter to our trend and our, understanding about the trade, so far we are not having any fun. If you were going to trade in the direction of the market, the context, and we've taken out the IB high, suggesting continuation, you're now stopped out and pretty bummed out about the whole thing. If you took the IB short or the IB failure, you're scaled, so you're pretty proud of yourself. But it's counter trend and counter context, so that's a no-no in my trading plan. Essentially, this market this week and last sucks. What can I tell you? It's a good time to be, doing like everybody else. Fly fishing at Jackson Hole or floating Snake River or all those things that I used to do. I grew up in that country. I grew up just on the other side of Yellowstone National Park from Jackson Hole. I grew up in Montana. So that's my familiar stomping grounds up there. And I realized that all of this stuff can just be a version of rationalization on my part. That's the reason for this stream and why I try to monitor it, is because I want to know that, if possible. I'm also working on backtesting these ideas. That's the ideal way to go, where you can an efficient backtesting system and method or software or whatever, that where you can do a lot of what if stuff and try to cut to the chase as fast as you can. I mean, stop and think about it. If you want to have 100 trade data set to validate a specific trade, you got to have that trade present itself to you in the live market and take it 100 times. Well, that could be 2 years. You know what I mean? That's that didn't work. Unless you just want this to be a hobby or a game or something, and then not what you depend on for your business and your livelihood, which is where I am now. Previously, I didn't have that issue, but my career evaporated earlier this year. The company that I was with for more than a decade sold, and the new outfit just said, well, thanks a lot, boys and girls, but we wanted the software and maybe one or two of the technical people, developers, but we don't need the rest of you. What are we doing here? Well, we're tagging them out right, left, and center. We have put the IB statistic in. It's done and dusted. There's a statistic that I haven't talked about for a while, I guess. I've mentioned the Traders Lab and Static and various people in there that are seem to be real good people, and Antonio here is one of them. Rod and Ned, and didn't matter, and those guys. Garrett. Rod's kind of one of the standouts in that he found somehow or another, got hooked up with Tom or followed him or whatever else back in, I think, around 2020 or 2021. And picked it up pretty quick, and has been independently trading very successful after a few, I don't know how long it took him, how many years or whatever, but he's also a very good software developer and statistician, and obviously pretty sharp fella. He's come up with a statistic. It's a version of the IB statistic, which the TLab, Static. He's also developed this Static application and site, which is what I speak of frequently. Unfortunately, was able to get in there as part of the testing stuff. Anyway, he's come up with a thing called the IB30. Now, we know that the IB statistic sets after the first 60 minutes or the first 1 hour. But the IB30 statistic says that the high or low of the first 30 minutes of the RTH, this is always the RTH session, has a around last time I heard it was about, or thought about it, was about 90% probability that it will be exceeded by price in the second 30 minutes. Now, let's just look at that. Here is the market open. and here's 9 o'clock. So here would be the high of the first 30 minutes, right? To right there. Now, the statistic says that that will be exceeded by price in the second 30 minutes. And bing, bang, boom, there you are. In 3 minutes. Not to be outdone by all of this. Up until the old-fashioned IB statistic kicks in right here at 30 at the first hour, and that's just been exceeded also within the first 3 or 4 minutes. Now, what does that say? I haven't started vetting that or trying to code that up in my backtesting stuff in IRT, but okay, here was the high, and here we got this. Not much of a range there, right? The thing that kind of appeals to me about this IB30 statistic is the fact that one other thing, quickly, you see the brighter POC, that's the RTH, and the more muted yellow is the full session. So here we've just had a migrating POC up, suggesting we may get our IB continuation now. Except for Antonio and I's tongue-in-cheek, this is our favorite setup because neither one of us have been able to do very well with this VPOC migration setup, which is a pretty widely understood and discussed one similar to the IB trades. The theory, of course, is, first of all, how can you miss the yellow line bouncing around? And second of all, when it migrates up, context is up, suggests price is going up. Remember the definition of the POC is the price at which the most contracts have traded so far in the session. So price is being, this is a fair place to trade. It's being accepted higher by the marketplace, by the auction. And it aligns with context, and it aligns with the IB statistic. So is this a good place to try to, is this confirm the possibility of an IB continuation trade? Where I've been hung up, and other people do, I've tried vetting this trade because it's so obvious and gotten terrible results. Because it'll pull down here, or somebody, TLab, Tom mentions, price check at aisle 3. They'll bring it all back down here and then go back up again. So it's not been a very profitable trade for me, or setup. And right now may be beautiful, and they may take off out of here and go zooming back up through the IB high and take out the all-time high again. Who knows? That's the joy of trading. It's 50-50. And I'm in a position of very, very risk adverse. Here we go, and this looks like it's going to work out fine. We've, the IB the VPOC migrated in line with context. We didn't pull back at all, and now we're getting up through the previous high and the IB high and all that kind of stuff. Let's see where we go. But now be realistic. This is 91. Here we are at 92. Got to get to 94 even to scale. So. And this guy's holding on, man. This iceberg boy, he's just trailing him along out there. When I first pointed that out, I think it was over here somewhere. I'm in kind of at another level also with the, as I said, you know, within one trade of having all 5 of those go into the next tier. So not only am I looking and considering T1 for the risk neutral scale, but that's not the point. The point is not to put risk on, expose yourself to risk in the market to get a scratch. The point is the profit target. So, okay, upside, yeah, there's no levels there. Once we could get, if we can get through this big pile of orders over here at 60, at 93, good possibility we're going to get a new all-time high. Context is up, IB statistic is up, VPOC migration is up. Good probability that we would trade that way. And there's, you know, between 93, now that's 65 is the first real obstacle of liquidity. And what you need, what I need in my basic risk neutral setup is 12 points to my target. It's 48 ticks. So if I got along here at 90, I need to be up here at 65.02 in order to have my T2, which is below the all-time high. That's a good thing. We got a big pile of liquidity living here that's been pretty resistant, and it's been in there since 7:30 this morning. Now you see what's happening. We've got it. This is a question that I always ask myself, and myself never has a good answer yet. How do you, what's the thinking about this major liquidities? Is it the lid on the pot? Or is it a magnet? And you'll find equal amounts of people or traders that feel strongly both ways. Looks to me like, in this case today, it's a lid on the pot. This has been in here since over here, 916, and it is capped off any of these attempts to get through. And then there's the analogy. Well, okay, there's 2 ways to look at this. How many times can you go to the well and sell off? And the other side of that coin is you beat on the bottom of a bucket long enough, you'll knock a hole in it. So boom, 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 and pretty soon there's a hole, and you eat through the liquidity, and away you go. Speaking of that, here we go. Now, with trading, that's kind of the way it is. Just as the probability of the next trade is 50-50, there is an equal and opposite argument, saying, belief, understanding about everything in the market that I've witnessed. Just liquidity being a real base one. Is it the lid or is it the magnet? Looks to me like in this case it's been a lid, and it looks to me like we did trade through here. They lifted off, I guess. We're still holding around 2.5, but I would think we may take that IB high and move higher, up through the 4s and up towards at least the 6,500, but we haven't yet, have we? And this is where you have to be in constant awareness of your state of mind and FOMO and hide, or whatever you want to call it, the monkey mind. and I'm just talking out loud here because it's my journal. I do not know how. Statistically, the way to understand the answer to that question would be to be able to code this up where we've tested a high liquidity level a number of times and see what the probabilities are that we've gone through it. But then you've got to do so many qualifying things that the human mind, that we as humans traders do without even thinking about it, you know, weighing in context and weighing in all these levels and weighing in the range requirement and the greater overshadowing, you know, context around the market and unrealized risk and all that stuff. I have no clue how to code all that in. It's amazing how we think. Human brain's pretty incredible, man. Yet to get there. Now these balls or bubbles, whatever, they're colored by delta. There's obviously both buying and selling, and the aggressor is the color. Might be worth talking about the fact that a lot of people don't want to believe or agree to. Excuse me. The futures market is a zero-sum game or environment. There is never, ever, ever more sellers than buyers or the other way around. It's impossible. That's why they're called contracts, and not shares or stocks or pips or what, you know. They're called contracts because it's a contract between a buyer and a seller, one-to-one. There's never an imbalance of one or the other. If somebody tells you, oh, the market went down because we had more sellers than buyers, then you can just look at them and go, you know, you don't know your butt from third base. You're just talking. How does the market go down or up? It's aggression. If the sellers come across the inside bid and hit inside market and hit the bid, hit the resting liquidity, price will go down. If the buyers come across the inside market and lift the ask, the price will go up. Real simple. That's how it works. You know, Tom and others refer to it as the market goes up to go down and goes down to go up, and that's exactly right. I believe very definitely. I mean, just look at the context here, right? Boom, 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 and after understanding that, you need to give some thought to all of these people buying, take this price up here, all these aggressors coming across the market, inside market to lift the offer and take the price up. Someone has been accumulating short inventory, taking the other side of those trades all the way up here. Or, in the case of a down context, the other way. So, who do you think that someone might be? Nah, this is interesting. That liquidity lifted off. Do you see this? And a little bit of it is lifted up here to 94. That's interesting. Are we going to finally start making some headway north? That's a possibility. And back to my thinking here. That's why, in my opinion, the market goes up to go down and goes down to go up, because I suspect that it's the higher time frame with deeper pockets that are taking the other side of most of these trades. And the way they're going to make money, it could also be hedgers, hedging options. They don't want to lose money either, I don't think. So how do they recoup that? Well, if you sold something right here, the only way you're going to get delta neutral on that specific directional trade is to get the price right down, back down here or lower. And then you made money. Market goes up to go down and goes down to go up, I think, is how it works. That's my assessment of it. This liquidity finally lifted out of the way. We continue to just hover around the IB here, and which incidentally is 1.25 points below the IB. I mean the POC is 1.25 points below the IB, and both POCs are now aligned at 91. There's not enough movement here for me at this point. And let me point out another thing to consider. There is an age-old, it's like the 11th commandment, thou shalt not diddle in the middle. By definition, what is the POC? It is the most traded price, i.e., over, under, in the market so far. The most likely spot you're going to get chopped up and stopped out. Now, this is a VPOC migration, but at what point does that turn into diddling in the middle? I'm not saying that it's not going to be a good trade. This wasn't a good idea to go, to try to play the IB continuation trade off of here. I'm just thinking out loud. And that's another one I haven't figured out. At what point does this become diddling in the middle and the IB, the VPOC migration is no longer? We may take off now. Well, we're getting some buy stops up there above all this liquidity, because at one point all these guys who were trying to pick the top and getting short have got their stops living up there, right? And there's 72 of them just got taken out right there. It seems to be lacking the momentum and the enthusiasm that you would expect. And again, the POC is only 2 points below our current price. Not the scale, not anything else. So I'm apprehensive to engage here. And could well, regret it when we go zooming up and take out new all-time highs. But it doesn't seem to have a lot of conviction for me. We're down, and now down to 64% of average volume, and our ATR has dropped down to 3 from a high of 470. What's random risk in the Richard, who He's one of the participants here on a pretty regular basis. He refers to a POTUS as Agent Orange, which I thought was pretty funny. Holy shit. Look at this. The U.S. imported 74,000 barrels of crude from Venezuela last week. And we imposed a 35% tariff on China and any other country that would buy Venezuelan oil. Man, the inconsistencies are scary, I think. Really scary. That's the unknown risk that really that's the real deal. Wow. Wow, that's really incredible, I think. That's really incredible.
Noches llenas de amor, corazón, hablarle en poesía, cantarle a tu alma y llenarla de ilusión, amor. Quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. Seré tu dueña. Yo quiero que me elijas cada día por amor. Corazón.
Wow.
Todo lo que viví fue para preparar.
I tell you, I don't know what to think. That's static, by the way. I always forget to change the screens around, so I hope nobody minds. And I'm sure they don't. Yeah. This is, the longer this kind of a thing goes on, now the liquidity's lifted off, the more risk, I believe, is involved. Remember that we took out these stops up here, right? These were all the top pickers that are, going short, and sure we're going down. Remember that on the other side of that coin, probably down around here, is everybody that's betting on a long. My understanding and my thinking is that in alignment with context, up's the way to go, and it looks like that's just getting ready to happen over here now. But I'm not convinced enough of it to put on a trade. Even, I would love to do that and get this over with, off my back, off my head, right? And then just be back to a normal deal. I'm really sensitive about that at this point, or aware of it at this point, aware of my, or on guard against my FOMO-y, get it over with, gamblering kind of a mentality, because back a few months ago, I was in the exact same position with the lead account here. I was one trade away from the profit target, and out of the blue came this surprise, life-changing surprise, that our careers had been, mine and a whole bunch of others, had been just instantly eliminated. And that, of course, threw me for a loop. And I didn't successfully take that last trade. Now, I didn't blow the account. I didn't need to reset. I didn't do any of that thing. But a couple of losses later, and I'm back to building it back up. And now here I am again. So I'm going to try to make that a learning environment. Yeah, see, Antonio? Make that a learning environment. Again, my journal here, and this, I'm talking to myself. The point of this is transparency and accountability. And, if that's the truth, that's the truth. And if you don't recognize that, then who are you bullshitting? Yourself. Oh, I don't think that's a winning idea. Finally going to make the move while I'm away. That figures. Well, there's 92, there's 94. Likely this will go to target. But it's dangerously close to that POC. Now remember, you're still not scaled from the POC, from the IB high. Only two handles. Dangerously quiet about any news. It's pretty funny that, I mean, it's a different world we live in now. I guess. It's we have one country declares war on another country and they're killing people, and on the other, at the back end of the country, life goes on and they're exporting, and the one that declared war is exporting some products to the other countries that have put sanctions. It's the weirdest thing I don't get it. It's starting to lend itself to the concepts of the Illuminati. You know, who the hell is running this thing? Be on guard now. Remember the risk awareness. Not getting any horsepower up here. If you got long hair and it doesn't come against you, you could get scaled. if you get long here and it goes down to price check at aisle 3, you got your ass handed to you. So that's how it works. Remember, the the whole idea is the outcome of the next trade is 50-50. And so you want to have as much of an edge identified or expectancy as possible, and a large enough risk to reward ratio that you are compounding positively. What is that? I don't know what the hell that is or why that showed up. I don't know what that even was, to be honest with you. Why did that do that? Maybe make sure everything's normal over here. Seems like it. I guess I just clicked down here got down here by accident, I guess. I want to be sure nothing's going off that I'm not aware of. Well, there you are. I'm going to be content here, I hope. To be patient and prudent here. I just had a thought. I need to make sure there's not some minimum trade in a X amount of days requirement or some crap on these things. Something I don't know here. I guess if I put on a micro trade over here, that it would replicate that on those other 4 accounts also. I might need to do that to make sure I'm not having some sort of a minimum account thing, minimum trade thing happen. I didn't think about that, actually. I didn't think about that at all. I better look into the rules. Because you can bet that they will be, they're on full alert to trip anybody up that they can to get everybody into the same bucket, enforcing and insisting on the use of TopStep X. That was the big drama with my account. This is rhythmic data. Obviously, Bookmap and IRT both use rhythmic data. If I could trade a TopStep X account with Bookmap and rhythmic data, that'd be great. I mean, okay, I do that, but they don't. It's only for use with TopStep X. Now, at one point, maybe still now, I don't know, you could trade Quant Tower with TopStep X data. It was called Program X, Program X is the white label that all these guys are moving to. And I'm sure I know why, but I'll keep that conspiracy under my hat for now. But Bookmap and IRT very definitely would not use that data, I'm pretty sure. Okay, well, there you go. Now it's, is it making a move? I don't know. We've been up here a couple of times before. If you were real quick and impulsive and grabbed along down here, you're pretty happy about life. You're scaled anyway. I don't know about how happy the rest of it might be, but you know, there you go. I'm wondering if I need to do that. That's something I'd, oh, looky there. And there's your stop. I can promise you that's news. That is random risk incarnate right there. That's my belief. That's a V-shaped thing. Now Rod and company are working on these V reversals. Quickly taken along. My bet is that's definitely a news thing. How could it be anything else? What sort of, there's no, well, here's a big sell, right? No likelihood of VPOC migrations anytime soon. Here we are at 13,000. And our closest neighbors are 10 and 11, so they're within this upper distribution. Again, this is nothing magical or mysterious about this. It's very just math, data, probabilities, statistics, that's it. We were down here, wherever it was last. You know, at 50, 70, somewhere around 7,000-ish, 7,500-ish. And they got it to migrate up here. There you go. That's all there's to it. It's numbers. You can tell exactly when that's getting ready to happen by the volume here. And what was this now? Wow, that had to hurt a lot of feelings right there. And I don't see anything in the juice. So maybe not. Maybe not. We're coming up on 11 o'clock. Well, 11:45 Barkin. The Fed Governor Barkin. Starts to speak at the 5-year note auction at noon. Don't see anything else. So here we, shake them out, shake them out. What is this? What is this? Irrational exuberance for no particular reason up here. 400,000 contracts so far. Those numbers are that's for the full session or Globex. So I started at 1,700 last night. Yeah, and here we are. It looks like somebody died on their EKG over here. Hopefully that's not me. So we're back to the normal, back to the original plan, which is keep the entire context of the day in mind, in view. Mr. Blue Boy over here giving me that visual reference. 6,500 still seems like a pretty solid line in the sand. 232 contracts up there. And the ever-present crows up here with their all-time highs. I kind of think that today is much as it was for around the Fed and in anticipation of the Powell speech. Boy, you can bet if they have any kind of a hawkish or, warning of any kind in Navidia, the bottom is going to fall out. And very definitely, this is absolutely no place I'm going to be playing or engaging. A point below the IB high is both VPOCs. This kind of random nonsense going on over here down 6 handles. Or more, no, wait a minute. 4 handles. And you remember there were only 3 handles above yesterday's close. Building quite a distribution, B-shaped distribution, or I'm sorry, P-shaped distribution, which is indicative of short covering, they say. Or at least selling. No, buying, that would be buying. As opposed to a B-shaped, which is long liquidation or selling. Now we're going to get some movement out of here. For whatever reason at 10:47 in the morning. Who knows, why on earth would that be the case? Do they buy some sort of a program kick in, or are we just trading them from here to here to here to here to here to here? I guess so. I guess so. This would be essentially a breakout trade, which I don't trade. In my world, I have an error code for breakouts. Not that it's not a viable, valid thing, but it doesn't work for me. When I'm looking at a breakout, I know it's a FOMO story. And it's probably going to go up here and take out this liquidity at 65 and maybe the all-time highs. Why that decided to happen at this time in the morning, who in the hell knows? I can assure you that I don't know. But it would be just Jim Dandy if you were, on it anywhere around here. You're not scaled yet, right? If you took the IB, any one of these IBs, it's not a scale as of yet, but close. That would officially be a scale, assuming you got in right at the IB. And then once you've got the scale, let's just put on your helmet and put your feet up and see what's going to happen. Regret, right? Hindsight, all of those things. So be ever present, ever vigilant against revenge trade or FOMO trade. God, I missed that. Wow, how can I do that? It's going to run without me. All of those things. And I feel them exactly too, also. Right now, exactly, to be specific. But I'm trying to be measured and disciplined and follow the plan. Not provide adrenaline, action-packed YouTube videos, YouTube streams, and certainly not, it's pretty hard to do both and have it be transparent and fully accountable. And I talk about my plan, everything in the pre-market, and when we get ready for the IB, when I'm anticipating the IB to set. And so anything that I would do contrary to that would be contrary to my plan, right? Not a good idea. Oh no. This is air quality or something's wrong. My eyes are driving me nuts. Itching and whatever. So yeah, here we are. Let's take a loop around the horn here. This is my IRT E-minis, or minis, not micros. This is the E-mini and the NASDAQ and the micro composite chart, the higher time frame. Interestingly, that we opened just above the micro composite VPOC and couldn't get down that little skosh to take it out. Interesting. Yet. And nor have we gotten up to the the famous Powell Speech Friday or highs. This extravaganza here was the Powell speech on Friday. What have we got for volume now? Oh, falling off. Now we're down to 61. We started out 75 or 6. We're now dropping down. Our ATR got up to a 461 or so, 465. We're down around 275. That light liquidity and that low volume gives whichever larger time frame traders are here participating in the market a lot more ability to shove things around because of the light liquidity. Think of it as the NASDAQ, right? We trade the ES because it's a more liquid, more less erratic, less volatile market, holds to price levels pretty well, doesn't go skidding by, etc. The NASDAQ does all of those things. So when we're in an environment in the ES that has a real light liquidity, it can start to trade similarly to those light, thin stocks or futures markets. And this last couple weeks of August are seasonality wise or seasonally recognized as the worst. Only outdone by Christmas and New Year as the absolute worst because of number of participants. I mean, it's pretty obvious. It's just common sense. Pretty obvious. Pretty obvious.
Salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados.
Had I gotten into a trade right here, I would be real prone
Cuánto hemos
to trail my stop up and try to take it out and lock in that first profit, which is a bad idea, and it would mean that were I in that situation, that trade would not be, I could not include that in the data set for vetting the trade, because you can't change those things. It has to be, the data has to be equal and identical. The points, the data points. What else is going on here? This is not fun. We're zooming up to 11. We could enter into that extra volatile 12 to 1 period and get up there to these levels. I don't know. I have no clue. What I don't think I would do would be anxious to participate. I'm sorry that I'm not in hindsight only, rear view mirror only. This would have been a potential of course, any of these would be the same, right? What's the difference between here or 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 here? Nothing other than the fact that this is a rearview mirror and I can see that this went up here and took the scale, where none of these others did. And in fact, this one took stop, swept the stops. So maybe that would be something to consider. Well, they've swept the stops here, so perhaps we have a higher likelihood of continuing. Now, as I mentioned earlier, this is the POC. Thou shalt not diddle in the middle. This is it. At what point does the VPOC migration cease to be a thing and it become diddling in the middle? And so I just back off because I don't know the answer to those questions. Also, we have the VPOC here, and there's the IBI, 1 point away. It's retail trader behavior that all the people along here that were excited about a breakout to the upside are throwing their stops along underneath the POC because oh wow, look at that big level. And that's why this guy happened and then this guy happened. Now these guys have their inventory. These guys are all licking their wounds. And looks like we might get higher ground here. I would not be at all surprised if we don't just run up to 65 and then the all-time highs. Wouldn't surprise me in the least, especially after or based on the Navidia numbers. So I stand here feeling disappointed about things, and I really need to look into that. If there's some kind of you have to trade rule or some crap that who knows, I don't know about, I don't think so, but I know that there is that in after you're funded now, because when we came over here, when we moved, I had gotten funded just before we left Kuala Lumpur in 21, and I'll refresh your memory, that's when everybody was dying of COVID and wearing masks. And who knew, had any idea when sea cargo was going to arrive? And so that live thing was canceled or closed because of inactivity, because our stuff was out floating around the ocean. And that's actually what kind of prompted me to build this computer, was wondering when we were ever going to get the rest of it. Wish I'd have got a different graphics card in those at that point, but woulda, coulda, shoulda, hindsight, right? I think I hear the garbage truck and I forgot to put out the recycle. I'll be right back. So this is beginning to resemble what is referred to by some of those folks in static as a bar trade, where we have a breakout and retest. breakout, retest, breakout, retest. It's a consolidation. I frankly don't. It's pretty loose as far as I'm concerned with regard to, like most things, it's the definition of any of these setups and criteria are based on your time frame. You know? Are you looking at, maybe best explained this way? Is this your time frame, the whole day? Is your time frame within the scope of one bar or one Renko? You know, that's really important. In my opinion, your risk exposure and potential reward to risk ratio and those elements which I think are important to trading, to my trading, is much better in at least this day time frame like I have. That's why I make an effort now, and particularly to keep the entire day or session, I should say, in view. And my price levels give me basically the entire day because these are overnight and, you know, the two sessions added together. Just thinking out loud. And hurry up and wait, right? Standing here, I have no problem exercising, self-control here and not, I don't think this is a environment that warrants risk. I don't think it's A+ setup. Nothing's presented itself so far. There's only a couple of instances here where you might have gotten scale. Well, anywhere along here, you got stopped out without a scale. What is this? 93. Yeah, stopped out. Now here, one of these locations after this big sweep, you would be scaled. So you'd have your helmet on, your feet up, and you'd be cussing and screaming because I would be. Because it's not going anyplace. And the object of the mission here is not to scratch trade. Granted, that's a hell of a lot better than stops. And that's why I do the risk neutral philosophy or methodology. But yeah, and we're sneaking in on noon here. Take it around the horn real fast. Yeah. What to say? You would expect a little more upside just to get that taper, that exhaustion taper of a couple of ticks, a couple of TPOs as far as the market profile is concerned. Got basically a double top up here. This is what I'm talking about. So that's that. But, talk about betting on the come. That's a pretty dicey bet. Our volume continues to slide. It started at about 75. Now we're down in the 60s. ATR is dropping down into the 250s. I keep doing that. Sorry about that. But that's static, so I guess I gotta up my game as far as my presentation skills here. I'm not very good at that. I am sorry. But I got nothing to hide, right? And I don't think anybody else does, so there you are. No secret sauce. We charge extra special double duty. Your firstborn child and your 401k for that special sauce. With that, I'm going to have a bite of my wife's wonderful fresh-baked homemade sourdough bread and some of her homemade fish cake. Yeah, and here we are. If you were Johnny on the spot or Mr. Mouse Boy and you boy or girl, Mr. Mouse Trader, and you got scaled up here, good for you. If you didn't, well, my condolences, because you're probably headed for a stop before too long. And in this kind of an environment, or any kind of an environment, keep it, have it tattooed on your forehead or something. Your ultimate prime objective as a trader is account preservation. How do you do that? Risk management. The various ways to manage risk are trade size, most importantly, trade frequency. Definitely have stops, of which if you were on that trade, you just got hit, have just gotten hit. And, manage or contain or plan, strategize, maximize the benefit of, whatever way you want to think about it, putting risk on in the market and the frequency and with which you do that. Also, if not more important, is your risk to reward ratio, or whichever way you want to go, reward to risk ratio, however you want to think about it. If you have a reward to risk ratio of 3-to-1, every time you get a winner or a positive trade, you get 3. Every stop or loser is 1. You can compound your account that way. 1-to-1, or God forbid the other way, you're going to go broke. That's not the way to manage a business. That's the way, some of the Silicon Valley folks and the Sam Beckman-Frieds and those freaking morons go about it. And Saylor and those guys, that lose money for years and whatever else. That's not our world. Would be great, wouldn't it? Back to the VWAP, RTH. There are 2, right? This is the RTH VWAP, and this is Globex, the mid. There's that liquidity at 85. And settlement. And it's coming off hard. Oh boy, how are those longs working out, huh? Maybe not so good. I have the stream, and it's my commitment to do this every day until I, fall over or whatever happens. But if you're not tied in or have a responsibility like this in this kind of a market, go chase your significant other down and or go for a walk or something, anything. But standing here now, you can stand here and narrate, which is what I'm doing essentially, and it never hurts to have more exposure to the market and the screens. But then there's also a time for, where you might have the cost benefit analysis of doing something for your health or your, eye health or whatever can be more beneficial, especially if you have issues with overtrading or, to hell with it and throwing on one, doing a YOLO or some stupid thing like that, which I, knock wood, I don't do that. Certainly not, it's not to say that I haven't had all of those issues, but I've just at a place at this point where that's not the case. So that's something to think about. If it's a beautiful sunny day, or go for a run, go for a walk. I prefer the, chase your significant other down and see what kind of fun you can get up to. That's always good, no matter what time of the day. I never really liked that significant other thing. Because maybe it's politically correct now. I don't know. I've lost all track of time, and I have no idea what woke means. But significant other implies to me that you have a lot of others, but that one is the significant one. I prefer to think of a partner, is I think a better way to go, because I am certainly monogonistic. I guess it's kind of like that old Crosby, Stills, and Nash and Young song. If you can't be with the one you love, love the one you're with. That's a philosophy that it'll end up get you in a lot of trouble. And today is developing into one of those non-target rich environments for me, for the mission I'm on at the moment, which is vetting these IB trades. And doing so in accordance with my rules and my trade plan. And not succumbing to the rearview mirror concept, which is so easy to do. Well, yeah, we came up here, we tested twice. I knew we weren't going to go any higher, and I got short, and sure you did. Tell me that again right there. What are we doing? We're directional. We're building our consolidation up here. Our VPOCs have migrated up. It lays just below the IB high. We had this sweep, and now we're trading up. All those things point to long. I mean, really, honestly. And there's what happened. Boom. So, important to always remind yourself that the outcome of the next trade is 50-50. Meaning, then, that you want to try to apply a methodology and setup and parameters that A, you vetted and you know has a positive edge, and that you skews that potential for whichever of the 50s of the 50-50 the next trade can go might move in your direction, in the direction of your trade, I think. And minimizing your risk exposure to the market and maximizing the reward potential, get the most bang for the buck. Go to any of these chat rooms and, some of these fellows that are nice and they always get lucky. Sure. Absolutely. There's a fellow that I shall remain nameless, really nice guy. Sometimes he'll ping me, and I have a Discord associated with this risk neutral trading, and we basically don't use it for chatting or stuff. Use it for just talking, both on voice or all of us on voice. And we've talked, really nice guy, professional, been in his career, health professional, very, very important job, career in a hospital for like 33 years, I mean, a real normal stand-up guy. And he cannot, he passed the combine, 150K combine in TopStep, which has a profit target of $9,000. His trading was so radical, and in some 1 or 2 days took so much more profit. Oh, and the consistency rule says you're not supposed to take more than half, or something like that. So he had broken the consistency rule to the point that in order to pass the combine, he needed to get $12,000 profit, not $9,000. That's 1/3 more profit than is required. Simply by not managing his trades when he was in them. But did so. Passed the evaluation. That's great. We talk about it. Super duper, dude. Now you're in the evaluation. Now, pull it back, put some risk parameters on, stop and think about it, blah, 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 blah. Oh, yeah. Day or two later, well, I blew that one up. Really? Yeah, well, that's the 11th one. Okay, maybe he needs to realize and come to peace with the fact that he likes gambling, whipping and spurring, clicking the mouse like he's killing snakes, and that's what gives him enjoyment or some sort of release from the tension of his job. And that's perfectly okay. But don't kid yourself into thinking that it's going to be a source of income and consistent profitability for you at some point when you're doing that. And when he made the comment, well, that's the 11th time, my thought was, and what have you learned over those 11 times? Because it keeps happening. I don't actually think Einstein really said it, but it's always attributed to him. The definition of insanity is to keep doing the same thing over and over again and expecting a different result. It is absolutely true and a perfectly wonderful saying, but I really don't think it was from Einstein. Doesn't matter. It works great. And think about that, 11 times. I was really surprised. And it's happened again once or twice more since we had that conversation. Now, the way a lot of people get into these prop accounts and blow up like that is they just YOLO, or they take, they they'll throw on full size, and if the 50-50 happens to go the way in their favor, they're, in the old days, you used to be able to pass the combine or an evaluation with 1 day in 1 day. Now it's 2. You can't make more than 50% for the consistency thing, but they will throw it on, and there you go. And of course, now you've passed the evaluation, and you're in a situation where you actually have to trade, and you can withdraw payments and all that kind of stuff, and they have no more clue how to do that than fly to the moon, because they didn't really trade anything. They placed a bet. They placed a real high risk bet, and it hit. Now they have no clue what to do. Fortunately for me, with these evaluations, etc., I have the exact same thought process, emotions, physical reactions and symptoms. Doesn't matter. I make no distinction in my mind or physiologically, whether it's one of my brokerage account or one of these evaluations is the exact same, and I trade them exactly the same way. Fortunately for me. There's another guy I know. And the way he does it is, he doesn't ever use a stop. The account is the stop. If he blows up the account, that was hit. That's, in his mind, that's hitting the stop. And I guess if you've got an unlimited supply of money, that you can approach it that way. But I don't think that that's a long-term, a wise long-term plan. I don't think. And he's one of these double down guys. I mean, basically a Martindale. He doesn't use any indicators or anything, but it looks like we got some support up here, and he'll go long, and then if it gets up here and it's so support, he'll double it up, and then he'll keep doing that kind of thing. And his philosophy is that, when they hit, he makes a lot of money, and when they don't, when it blows up the account, that was a stop. I think it's a real poor plan, and he's doing it with Forex, and so you got to take all that crap into account. Probably 90% of it's complete bullshit, faked accounts and all that. Some people spend a lot of time doing this. There's something. I'm an old person, right? And I've had a real fortunate life in that I've lived around the world and a lot of different environments and things. A lot of pretty extreme environments and things. And I've always been amazed at criminals, typically successful ones, obviously. The amount of effort and brain power and creativity and resourcefulness that they apply to their criminal endeavor, which is the ultimate high, well, not the ultimate, but extremely high risk environment. If they just applied that to a legal thing, they'd be a house of fire, there'd be no stopping them. I've always been amazed about that. It's just seemed to me to be a real motivated, driven, skilled, a lot of times intelligent individual that's misdirected, that somewhere along the line they took the They took the wrong fork in the road somehow. But that's a similar case with some of these trading gurus and the shill boys the shill folks for the prop firms, not TopStep. They don't have affiliates. There's no codes. They don't do any of that stuff. But the others like Apex and they pay huge money and do all kinds of things. I'm told. I don't know. I've not bothered to try to figure it all out. But they'll have 2 accounts and they'll put an equal. For example, in this case, they could have 2 accounts. And I suppose there's a way you could set the copy trader thing up to go the opposite way that you're going on your lead account. Maybe, I don't know. And whichever one wins, that's the one they show you. Which means, of course, that all of their profits and all of this stuff that they brag about and payouts that they're taking is, you would suspect to be bullshit and bus tickets. But anyway, maybe not. And in the case of trading, I can sort of understand somebody going down that route if, in fact, they can't trade. And there's the old, very true adage that those who can do, and those who can't teach. And you'll find that to be pretty true no matter where you look. Okay, so I'm going to slide into the noon break here and go do some of the normal things I need to do in the morning, the day, and get back here after a little bit. My advice is this is a non-target rich environment, high risk to a lower reward environment. And, factor that in. If you think you're going to trade, I'll be back in a little bit. I keep an eye on things here, but I'm going to mute off the mic. And the cats have had an intervention. They insist I go take a shower. So there you go. Well, we've had that bond auction, or R, at this moment. 12-year notes, I should say. 5-year notes, Jesus. Just washed my tongue. I can't do a thing with it, I guess. So anyway, yeah, we're going to just, I recommend using extreme caution. Don't take any trades which you have not pre-identified have a positive edge, a substantial edge or expectancy. Follow the entry criteria of which those trades were vetted specifically, because this is a really high risk, low reward environment, in my opinion. And we're 20 handles wide, right? Or more on the day. And if somebody said, wow, you're full of crap, I got long down here and I'm made a lot of money. Good for you. If that's a trade that you vetted and that you know has a positive edge with your parameters and your entrance criteria, that's fantastic. I have no intention that this stream is my way or the highway. This is what I'm doing. This is my virtual journal. When what I see on my screens is captured in the video, and what my voiceover or my narration or is some insight as to what I was thinking. And if listening in on that is, humorous, entertaining, or perhaps informative or helpful in some way, that's great. Whatever. I don't care. Throw a thumbs up and a like and a subscribe and whatever else. That's super. Put something in the chat. Drop a comment. If these session prices could be handy for you, I provide them freely. They're 24/7 real time from 1700 on Sunday night until 16 or 1700 on Friday afternoon. Put some, subscribe, like, put something in the chat so that when we can hook up, and I'll hook you up with them. A lot of people use them. Free, of course. And this is the idea here is that I take my trading from zero to hero, and it's completely verified with full accountability and transparency. I start each stream at 8 o'clock in the morning with the pre-market and reports and those kinds of things. And it trades nonstop. The stream runs nonstop for 7 hours until 1500. My charting software, this is Investor RT. This is my high time frame version or view, which is a RTH session, daily candlesticks. Wherever price overlaps, I draw a volume profile around them. By doing that, I get a micro composite high and low volume nodes, which are these red and green lines. You notice they're just the high and the low volumes here in this profile. And it generates a micro composite VPOC, etc. The red and green lines are the high and low volume nodes. Levels push automatically to bookmap, as do the session prices. I enter the other levels manually. This is the market profile. I also have a similar setup exact for the micros. And I push the micro levels too, if that's helpful. This is bookmap. This is the micro composite column where I enter the levels manually. And this is the high and low volume nodes column. Full session volume profile, which started plotting last night at 1700. We'll go through 1600 today. This is the RTH volume profile, which started at resets at 0830, and that's, if you're around then, please be welcome. Been having a problem getting that to be automatic at spot on 830, and for years it was. Now I don't know why. This is the lower my notes column, which is pretty important to me. First I changed the column title to the open type for each day, and then that dictates which statistics I enter here associated with the price levels, and this is all done long before the market opens. I also then flag the migrating volume points of control, because in the old days I used to be zoomed in more like this. Well, the yellow brick road here, the yellow line for the POC, plots all day long, obviously, but it'll be scrolled off the left of the screen, and I wanted to know where it had been before. Now I have a new workflow, which I like better. At the open of every session, I throw this blue or vertical line on the chart at the session open. And then that's all that is a visual cue for me. I can glance left or out of my peripheral vision. If I see that blue line, excuse me, I know that I've got the full session in view on my chart. If I don't, then I need to adjust it. And my idea here is then that I keep the full session in view, and that, then I have the graphic VPOC migrations as reflected here. And I got to throw another one right here. I keep it up just out of habit. So now we have the VPOC migration pretty much at the IB high, and the VPOC, whoops, wrong way, Corrigan. I don't know what's going on. I don't know what that's up to. Get up there. There you go. Is this going to be the 12 o'clock shenanigan? That got a lot of people who thought they were going to get this higher ground, and the indicated or the suggested IB continuation trade, and got them stopped out and behind the 8 ball. Now what are we going to do? Who knows? We've got liquidity at 6,500. Been there a long time. Couple hundred contracts. And don't forget we have these, the leapfrog all-time highs. This was put in the RTH session, and then, not to be outdone, the ETH guys put another one in just above. So I will step away here for a bit, rest my eyes, put some drops in there, and keep an eye on this thing. If we get the 12-to-1 statistic could be in play, that says that in an unbalanced day or a directional day, which I think we could agree this is, if a new high or low is put in during 12-to-1, there's a very high probability that it will, that high or that low will be exceeded in price, by price, in the balance of the RTH trading session. It's much like the IB statistic, only it's called the 12-to-1. There you go. Well, they finally got up there, did they? Yes, they did. And why? Now remember, this was the previous RTH high. So we're not quite there yet, but pretty close. This is the one to watch. Okay, well, that's pretty cool. Now, there is a new idea that we've been following in the static, and it's something to think about. When the VPOC migrates outside of the IB, either way. But in this case, it's not enough. Typically, it needs to be about 3 or 4 points. But that would have been this then would have been a good opportunity for the IB continuation, which obviously has been great. I just crap out every day about noon for a little while. Nice. So this would be then the IB. Now we have the 12 to 1 trade statistic in play. Let's see. Got right up here at that 95s or 65s and took them out, right? I would have to say I'd be a little bit. Why is this? Why did this happen right here? Let's see. Well, I don't see any news here. For that 1 o'clock burst. Now, whatever time it is, 1-ish, 1:10-ish. No, I guess it's just pure market action on light volume. I guess. Picked up a little bit. 2 or 3%. Well, that figures. I guess I'm going to have to make it. These kind of days where I lose focus, and I tend to think that it's better to do something useful. And then, of course, the minute I step away, this kind of thing happens. Oh, boy. I would think I could get away for an hour, but maybe not. Maybe not. Boy, they hammered him here, huh? Hammered him there. So what happened here? Let's just have a look. We did finally take out those highs, but not over here. You can bet that at some point in time, this market is coming down through here again. Well, maybe not, I guess. Yeah, I would still imagine so. What do we got happening up here? We're 0.29% positive change. 613,000 contracts since last night. Well, here I was here, and then this happened, and now I'm here. Bummer. In the sense of keeping things uniform, this is 1 point high in the full session so far in range. Or view, or however you want to put it. This blue line represents the session start. I put that on each session just sort of as a visual clue for me. Pretty light right here, huh? Why did that happen? I don't see anything or hear anything or whatever else, but it did, that's for sure. So the 12-to-1 statistic is, you know, pretty basic. It's much like the IB statistic in that if the market's out of balance, which I think we would have to agree is, and we make a new extreme high or low in that 12-to-1 area, then there's a extremely high probability we'll take that out again before the end of the session. So I think that's how it goes. pretty. And if you wanted to be real technical about it, we've already done that. Could say that this was the high from the 12-to-1, and we've already taken it out. So, yeah, I'm not sure. Maybe I'm not remembering that right. I better look it up. Would I imagine that they're going to trade down through here? Yeah. I would imagine that they're going to rotate down through here and looking to see if these prices are still too thin. And would I have liked to have been up and standing here when this happened? Yes, I would have. I would love to have had that trade. Wow. Not quite to my profit target yet. My profit target would be at 4. IB being at 92, assuming that I got in right in here. I need 12 points for T1 and T2. Very definitely without heat, T1 was in play and achieved. So it's, you know, put your helmet on and put your feet up, and it's risk neutral. And then see what's going to happen after here. It's only got to get to there. Which is pretty snazzy, because then you would be under, you know, you're still within this all-time highs. And this is interesting because they haven't quite gotten to here yet by 2 ticks. Now, close only counts on horseshoes and hand grenades, I guess, trading. Look for us to trade through this here. I would be really surprised if we don't get down through this real light area. here to say touch this developing value area high zone. And we are fast approaching the world famous power hour. Outlawed in 50 states, boy. And there we go. Well, now, what have we got going on here? Still pretty light volume here. And our rotations are really collapsed, which is a good thing, sort of. 8 minutes into the power hour here. So I'll do the daily recap at about 14:30, I guess, ahead of the market on close orders, and just remind the stream starts every morning at 8 o'clock, 5 days a week, and runs the entire day until 1500-ish, sometimes a few minutes after. In the spirit of transparency and accountability, and my commitment is to not take any trades on the accounts off the stream. So the only way I know how to do that is have the stream last all day. Then I don't ever have that problem. Early on, I did have the problem. I thought, well, 2 hours is about enough for the stream. And then later in the afternoon at some point or whatever, oh, well, here's a trade setting up. And I didn't take it because I think I took one of them. The point is, I trade set up and I couldn't get a new stream fired up fast enough, and that didn't make any sense because the continuity would be all goofy, and so I learned immediately, well, let's avoid that and do it this way. A little bit cooler today. It's only 30 C. Which is 79 F for you Fahrenheiters in the group. Yeah, well, here we are, boy. We did get that, as I pointed out some time ago, we did get some excess at the top in the market profile anyway. You want to have these TPOs, don't be real granular about the 2 ticks of excess, and that's correct according to Peter Stottlemyre's original deal. But in order to get these profiles to fit with some continuity here, I have to have the number of TPOs kind of condensed so I can see the overall idea. Otherwise, you just see a little blurb right here, and that's about it. You can see that on the price scale, there's 4 points between each of these major price levels. And here we go now that we've closed through that low volume area. Are we going to get down to the VPOC once again? Let's see, what do we got here? 17,256. Well, we got a hell of a long way to anything else. We got to add more than 10,000 contracts anywhere up here to get VPOC to shift. Here we need about 7,000. And what is this? This is news. There's no question about it. That's something going on with the news. The random critical risk squad has struck again, in my opinion. Or it is just so thin that somebody's got the horsepower to shove that around, but I don't think that's the case. Let's see what happened over here, if we can see anything. I don't see anything here. Which is kind of spooky, but remember now that there's going to be this is a monumental earnings report right here. $4.4 trillion market cap, the largest company in the world. Or in the free world anyway, where records are kept. Who knows what's really going on? Maybe China or Russia, but I don't think so. The half moon indicates that it's after the close. The sun indicates it's for the market open. And if you want to be more specific, it's at 1520. And then 1600 will be the earnings call. What was this then? Was this... God, I don't know. And this is the indicative of a light, this is kind of NASDAQ-y behavior in a light market is my only explanation. This was somebody, irrational exuberance to get up here to these highs. And now they're pulling it back to get it into some semblance of mid-range to see what the hell happens with the earnings. We have 45 minutes left we have about 1 hour and 5 minutes left till the earnings number report. So there's that. And where the hell was the open? Our open was down here at 74-ish. Pretty good range now. A pretty good range today. Definitely directional or out of balance, whichever way you want to look at it. Suggesting the IB continuation trade, which eventually happened here. Now, 100% rearview mirror, Was it going to happen here? And then you got hammered? And what's the difference between this and this in reality? As far as being able to watch that. The only thing that happened differently right here was this little VPOC migration, which I've talked about quite a bit. It is a structured trade. A lot of people watch it. How can you miss where the yellow line goes, right? The yellow brick road. And migration in a direction indicates that, remember that the POC marks the price at which the most contracts have traded so far in the session, meaning it's the most acceptable price for where traders and their clients figure is a fair price, more or less, to do business. Okay, so the statistic says that whenever this migrates up, that would indicate movement in the direction of the migration, and that would be a reasonable trade. But it is by far the worst one I have as far as setups, and other people I know the same. One to vet because it's so obvious, but not a good one for me. In static, they've been looking at the one rod's got some stats, I believe, actually on it, where the IB migrates outside of the POC migrates outside of the IB, but it needs to be by a minimum of 3 points. And then that's also adds more confirmation to that trade. But One thing that's been studied by some guys lately is big V reversals, where you have something like this and then you trade the opposite way for it. In my case, there's no range requirement here. There is no area where there is an unobstructed path to the risk neutral scale. This is okay. This is 92-ish to up here, but this is the VPOC, and this, that's the the 11th commandment is thou shalt not diddle in the middle. So that's not anything I would be looking to trade. It's just, there are days when, the majority of days, I believe, when you don't trade. Now, Rod and those guys who are very successful, Rod has gotten it down where he sees he's now only taken A+ trade, in his opinion, in his world, A+ setups, and he's taken 2 or 3 trades, 4 trades sometimes a day. I don't have that facility because I'm working on the IB, so that's restrictive, absolutely, because I'm vetting the IB setups. I'm not looking at any of the other trades that are going on. Is this another IB continuation up? Well, that's a real stretch at this point in the day, and with the price action and with the POC just here, that's not for me. If you've got that, sorry, I had the wrong window up. Sorry about that. Sorry. What I was talking about was this V here doesn't meet my range of requirements. Here upward to the developing value area high. And of course, don't forget we still have these all-time highs above us. Now, I think I'd bet anybody in the room $1. I'll bet you $1 to a donut that, assuming Navidia beats or has a good earnings call and numbers, there'll be a new all-time high. Just simply because of the irrational exuberance that's going on in the markets now. $23 after. I think I'll start the daily recaps around the turn of the corner, I guess. Now, here's something to watch. Here's our MCVPOC from through yesterday. right here. Doesn't seem to have much interest in anyone at this point. The big sell-off early in the day. This thing was a Fed speaker talking about numbers didn't look as good as the administration was putting, advertising. Or we've gotten into a real strange period of time where we never had random, critical risk like we have now. We didn't have people taking the stage or the podium and the microphone and the camera and just putting out complete made up stuff like they're facts. We didn't ever have any of that. We didn't have this continual reality TV performance of signing executive orders, and I don't remember ever seeing the president sign executive orders, except maybe it was, maybe some special thing like Obamacare. They signed a bill there. I don't remember regularly knowing or seeing televised cabinet meetings or any of that stuff. It's a different world we live in now. It's reality TV. And, don't forget, that's where Trump got his public start. So that's what he's, I guess that you could say that's what he is experienced with and what he's more or less good at. He has the facility of saying anything he wants to say, whether it has any degree of truth or not, without any issue, and says it convincingly enough to where there's a large group of people that believe it or think it must be true because that's what he said. And even if it's unquestionably proven or turns out to be wrong from the very get-go, the damage is already done, I think. I don't know. It's a weird time to be living here, that's for sure. Certainly am. Huge regret that we moved here in late August 21. Pretty never expected this to happen, frankly. I never expected this kind of thing to happen here in my life. That is for sure. Another one of those here's that V reversal, V bottom again thing that we was talking about. I don't see any edge for me. I have no edge identified there, so I haven't vetted anything along those lines. And just about 2 minutes to the bottom of the hour. It's disappointing that I guess it's on purpose, but the cash closes 15:15. So a limited group of people can trade that earnings. And here we go around that into the final half hour in the market. Profile world, that's the final bracket. Right now. All right. Let's take a run around the recap here and see what the hell happened today. The overnight, first of all, it's important to notice that the overnight was just completely useless. About 18,000 contracts traded in total the whole night. Here's the overnight high and, the overnight VPOC, etc. like that. This is yesterday's RTH, not the overnight. This is the RTH sessions only. So we eventually took out that overnight high. We are value, if you want to look at valuary, meaning these bluer sections of the profile, which represent 70%. I know it's 68.9 or 7 or something, but I leave them at 70 because that's what everybody else does, and then I don't have to argue with people when I have the value area high and low in those session statistics, like over here, value area high and low in those that are here on my session prices. So what have we done? Well, we're overlapping higher. We're not overlapping value. Actually, value is building higher today than yesterday. Context was essentially up, suggesting trade in that direction. I don't want to ever trade counter trend or counter context. This is the NASDAQ, and this is the high time frame micro composite. We didn't get down to this POC and make MCVPOC, but we are making ground higher. We did get finally out of this big owl beach day. So we were, inside here and inside again, and now we're not inside, but just by a little bit. Let's see what happened with the ATR throughout the day and our average volume. We were up around 70 at one point, and now we're down around 67. A minute ago it was about 62 or 3. So it's fluctuating here. As far as the reports go and the news, my two programs that I lean on heavily are investing.com, which I like because you can filter for your time zone and everything specifically that you want to have shown, and it gives a more concise rendering for me of the reports for the day or the numbers. And then this is earnings, and you can do today, tomorrow, this week, whatever you want to do. This again is the biggie. This is going to be released at 1520. All at 1600. And the other one, and this is free. I'm sure you can pay for it if you would like to. And this is the Financial Juice. Once again, this is free, but you can certainly pay. These are the more or less equal to the investing.com in terms of the calendar, but this offers a bit of a kind of a squawk box feel, or squawk box environment here. Again, free. And when we get to 1450, which is the market on close orders, that'll pop up over here too. Okay. Bookmap, our old buddy, the execution platform I use. My plan, my workflow now is to keep the entire session in view with this blue line as just a visual reference, so I can glance left. If I see that, I know I'm all right. This is the micro composite column where those numbers are entered manually by me, the levels. The high and low volume nodes from the micro composite are pushed automatically. This is the full session volume profile, which will plot from 1700 last night through 1600 today. RTH volume profile, which reset at 0830 this morning until 1600. And then my notes column, which I've explained, but here we go again. First thing I do in the morning is clear all the notes. This is in the pre-market. I change the column title to reflect the open type for the upcoming day. Very simply done. Then I use my statistics study and bring these statistics for the associated prices into this column. And this is all done in the pre-market long before the market opens. And then throughout the day, I put these migrating volume profile or volume POC flags in here so I can track where it's going, even though now that I have the whole session, I can see where it was, where it's migrated. But previously I didn't do that. And these are the session prices. There's no indicators on my book map or my IRT charting. There are just the POCs, which simply mark the price at which the most contracts have traded so far in the session. There's a VWAP for the RTH and the GlobeX, volume weighted average price. I guess technically you could call those an indicator. And there's the RTH mid. The only other levels that aren't just falling over simple, overnight mid, developing value area low, value area high, overnight low. I mean, those are abbreviations, and there's the line. What do you want? Open, The only lines that might be a little confusing to some is the IB high and low because of the naming, and that's from the market profile days. It's initials for initial balance high, initial balance low. The reality is they just flag and mark the high and the low of the first 1 hour of the RTH trading session. That's it. Now I'm wondering if I missed an opportunity here. Don't like to take these late trades, to be honest with you. I don't like to be involved. Seems to me that the risk to reward reduces or the potential risk increases in RTH3. But this, if you want to be technical about it, this would be a IB continuation setup where you come through the IB, come back down to it, don't make it, and trade in that direction. The problem is it's diddling exactly in the middle, so that's the 11th commandment for me, and it may run right up here and take out a new all-time high, and I'll be, forever, state of FOMO. But you got to stick to your plan the trades and trade the plans, and you have to stick to your guns. And I very definitely believe, suggest, and practice myself that you never change your trade plan during the active trading session. That's for your homework period and when you're cool and calm and no adrenaline zooming around in your brain or, FOMO coursing through your veins. That's, I think, really important. And of course, FOMO is fear, revenge trades, all of those things are innate within our DNA from gazillion years of evolution, or if you're a creationist, the last 50 years or whatever it is, whenever they think that things started. But even there, it's been a long time, and those things have developed. So you're not ever going to eliminate them, or I'm going to get hypnotized and eliminate FOMO. Absolutely not. It's like saying you're going to eliminate your sex drive or hunger or need for sleep or whatever else. These are all things that are cooked into our psyche. What you need to do with those ones adverse to trading is, this is my opinion, okay, is you need to recognize them and not act on them. Be an adult and rise over those, and that's not part of your trading. You're flying an airplane and you've got an engine out. You're afraid, you don't just cover your eyes and start screaming, or praying and let loose of everything and go auguring in. You rise above that and you deal with the emergency and the rule, one of the acronyms in flying, because I was a pilot for years, one of the acronyms in flying is you aviate, you navigate, and then you communicate. In other words, the first thing you do is fly the airplane. Next thing you do is navigate, where the hell am I? And the third thing you do is get on the radio and tell somebody about it. You don't do it the other way around, for example. It's kind of like trading. And all those fears and FOMOs and stuff like that. So there, we're back up here to within striking distance here now. I guess they were just shaking out some people and shaking out some longs, making some money on a light market. Do I think we're going to get this and this? Yeah, I do. I'd be surprised, unless, Navidia has a gigantic miss or something and that the bottom falls out, but I think that's going to happen. So we can, the stream will record this and we'll be able to see it's just a guess based on where we are, the emotions within the market, the irrational exuberance about trading higher, and these are going to go up. Well, obviously everybody knows they're not going to go up forever. Market goes up to go down, goes down to go up. That's how the other side takes profit. All the people that are cheering the market on are people like whatever his name is, the cabinet maker guy with a ponytail. What's his name? Starts with a K anyway. He's the CEO of Cantor Fitzgerald and has been for years. His brother was actually, for years, his brother was killed in 911 because Cantor Fitzgerald was one of the big offices in the trade, up at the top of the trade tower. And now he's jumped over all the people that work there and put both of his sons in as directors and board guys. He, bought a $77 million apartment and was neighbors with Jeffrey Epstein. These are the people that are walking around pointing their fingers and making decisions. Unfortunately, it's a weird world. Absolutely. It is a weird world we have right now. But do I think we're going to take a run up here on Navidia earnings? Yeah, I do. We've gotten right back to our highs, have we not? Nothing for me to do. Nothing to see here. There are vetted trades in other places. The mid VWAP or mid VPOC, VWAPs or VWAPs VPOC. there's no range here, in my opinion. The range requirement doesn't exist, but these are ones, and and if you took any one of these, you're thinking you're a frickin' star. You're a market wizard now, and good for you. I hope so. And I'll be the first to say that if I could figure out a less complicated, simple TopStep X, if I could trade on TopStep X without any indicators, without anything, and don't pay for any data, don't do anything, just click, bang, boom, and make money, like some of the fellas seem to be able to do over there, good for them. I would love to. I'd love to not pay Bookmap or IRT or go through all of this, these mental exercise and gymnastics every day about these details, but I can't, and I guess I'm not motivated enough to just suddenly start doing that and get up to speed with it, because I'm sure I could if someone else. I've always been a firm believer, if somebody else can do something, so can I. Sort of like math prodigy or something like that, but typical skills that are learned. Flying a plane, sailing a boat, cowboying, trading, construction, all that stuff. So there we go. We're going to have the market on close orders. That'll pretty much be the market wrap and recap. Remember that the stream is every morning at 8 o'clock in the morning with the pre-market, etc. If the session prices would be beneficial for you if you have Bookmap, or if you don't want them just as, it's a CSV file, so you could have it in a spreadsheet or whatever. Free, happy to share it. That's what I do it for, why I did it. Just like, subscribe, and drop something in the chat. Let me know, and be happy to hook you up. Today is Wednesday, big day. Wednesday, the big day. 15:20. That's annoying. And then 1600. Right the moment the market closes for, the market closes, all of them close for an hour. Pretty sure that wasn't I'm pretty sure that wasn't a coincidence. And also, boy, I bet there'll be an interesting RTH Open. Uh, 2 minutes till the market on close orders. Lately, the market on close orders have been a giant nothing. Yesterday was some movement, about more or less like this, about 10 points, which is reasonable. Don't forget now that because of the way I have these scaled, this is 10 points right here. So these are nothing moves, but I have to keep looking over here, and we're now at $1.75, so we want to get a little closer into the picture here. Going the wrong way, Alice. There we go. Now we're at a point. So this would have been lovely, but it's not doesn't qualify for one of my trades or the trades that I'm vetting, because it doesn't have this right criteria set up, etc. To be honest with you, my criteria at this point doesn't have the POC in there anywhere. The only thing that we've been talking about that I haven't added to my strategy or my list of rules is the POC, but typically when it might, as I said, Rod has done some looking at it when it migrates above or outside of the initial balance, high or low, obviously. And I'm using this as an example because here we are. But it needs to be about 3 points. So if it had migrated up here someplace, then there's a statistic that we come back to the IBI and then take off, I think is how it goes. I'd have to go look, to be honest with you. And there is the market on close orders right there. Boom, boom. So we're going to get above that. We're going to get above there, are we? New high in the RTH. I don't know. And then we have the big weight for the earnings. The earnings number will come out during the wind up of the session when most people aren't trading. So it's typical, only the few people that get to make lots of money are. So here's the MOC imbalance. S&P 500 is plus 354 million. NASDAQ 100 plus 441 million. The Dow 30 plus 97 million, and the Mag 7 plus 440 million. Market on balance orders. Market on close imbalance orders. Let me rephrase that. And 1520 is the next big deal. We still didn't get to that previous RTH high. That's pretty funny. Or not funny, haha, but strange. So what am I doing here? Well, there's 92 and 02, so there would have been 10 handles. Still wouldn't have been 12. But and remember that if you're trading an evaluation, and even in the case of some brokers, they require you to be flat or out of the market somewhere between 1500 and 1515, or you're looking, if it's a broker, or you're looking at the carry margin, which would be, instead of $500, it's all of a sudden 25,000, where you get a margin call. That's kind of pretty sort of disappointing. It'd ruin your whole afternoon, I guess, couldn't it? So, yeah, here we go. 53. I'm going to load up my tea glass here and hot water and a green tea bag, maybe. Well, they're getting pretty excited here. 5 minutes. By the way, carrying on the theme of transparency and accountability and whatnot, I noticed that the stream reflects my monitors, not just the application. So any open programs are obviously at the bottom here. There's the clock, hours, minutes, seconds, the date. You know, it's pretty obviously fully transparent. Same thing over here. Well, here comes the liquidity jamming in here. I bet you they pop it up over this just in the next couple minutes. Watch this. Boop. Come on. I know you're gonna. This, a lot of people refer to this as the closing swing trade. And I think I've maybe only made money on one. Maybe when it used to really pop, unlike this kind of thing. So, you know, just take off. They get a squeeze on, for example, and just grab along and hit along and bam, bam, out go your targets. It's kind of like a report. And again, just like a report, it's no way to control your risk. It's just gambling. Maybe there's some way to do statistics around that, but I don't know what they are. I mean, I do know what they are. I know how I would go about it, but my point is, based on no statistics, just purely a gamble. I've tried it. I did a Python one. I was trying to learn about Python and back testing a few months back. I wrote a little piece of code, a little Python that given the data that I would upload every week from IRT, and put in the dates of the non-farm payroll or some report, for example. Non-farm payroll, consumer confidence, PCE, I think were the ones I did. And then I would put in the values. It would look at the values in that period of time when the report came out, and spit out okay, if you want to be outside of the average rotation for the last 10 reports or whatever else, it needed to be so many points or so many ticks away. And then at that point, I was playing with an old idea that I had about passing evaluations back in the days when you could do it with just one trade in one day. In other words, what was the profit target to pass that evaluation? This was also the reason why profits came with daily loss limit and the consistency rule, so people would stop doing that. Anyway, it would tell you the amount of ticks that you needed, where to put your entry, where to put your stop. And what you would do is just bracket the order. So if you thought, like here we're trading and the non-farm is getting ready to go, say, or the Nvidia earnings, however many points above the bracket was to try to get you out of the rotational stop zone, you'd put a resting order or a limit order to buy above and a limit order to sell below. That was kind of interesting. Gambling. I mean, a little bit of look back, but not any kind of a real statistic, and basically gambling. Now we sell down. 30 seconds. 10 seconds. Oh no, 15. Sorry. I'm counting the wrong way. Liquidity jamming in here for all those market on close orders. I'm sure I mentioned at some point in the day, but in case, the volume bubbles or dots or circles or whatever are colored by delta. Obviously, there's buying and selling going on here. Has to be. It's a zero-sum game. And so the aggressor is delta. Not more buyers than sellers. More aggressive buyers than sellers. In this case, more sellers coming across the inside price and hitting the bid. Back we go, and we still didn't get that. Oh, did we? Yes, we did. We just got up there by that one tick and tagged out our all-time high from the 30th. Sorry, 13th. Duh. Did we? It looks like so, doesn't it? Oh, excuse me. All right, so there's our... I'm going to leave this running. I'll leave the stream. Maybe? So now we have 20 minutes to wait for Navidia. The market will go auto stupid and just kind of thin out. As we get through the curb trade, they called it, this little 15-minute thing. All right, so there you go. There is 7 hours and 2 minutes. Tomorrow morning, 0800 pre-market. I think just out of curiosity, I'll leave things running here for a little while and see what happens around that. See what happens around that Navidia news and capture it into the stream. My book map, obviously, also completely and very faithfully copies all of the data, any orders, movement of orders, stops, targets, all that kind of stuff, in another location locally, different than the stream. But the problem and the reason why I went with the stream as it is because the book map recording and it records every session. I mean, whenever I have it running and all orders, it doesn't pick up the voice. So there's no input as to what, or insight as to what I was thinking. Not that what I'm thinking is earth shaking, but for my purposes, as point of view of the journal and the stream and reviewing, it's important to me. Okay. I will let her run here for a while. Got about 15 minutes till the number. which is quicker actually, whether it's investing.com or Financial Juice, to be honest with you. Which updates faster? I don't think there's going to be any question on needing to know which updates faster. I think it's going to be plain as the nose in your face right over here in the numbers. And I don't ever listen to the earnings calls. It's not anything that'll affect me one way or the other. Mentally, psychologically, but not as far as trading goes. I wonder which update's quicker. What else is going on? I guess everybody's quiet now. Of course it's 4 o'clock, 4:30. That guy's name. I think this is phenomenal. Right. Truly phenomenal. Well, I don't know what that boy's name is. I saw it somewhere today. He was talking about something, like usual. So we are about 7 minutes away from the number, and boy, they're flat, huh? And I would guess, I don't know about earnings. That'll be interesting to see. Typically with a number, non-farm payroll, for example, the book would just go dark. All these numbers will lift off. We'll go down to the onesies and twosies and that kind of thing. Let's see what happens going into this earnings. And I think we're going to have to call that a tag. By golly. Actually, that's not true. Because this number is yeah, it is 6202 half, but today's high Oh, yeah, it is right. It's correct. So it's tagged to the tick. To the tick. Getting some action here now. They're going to start positioning. We got 5 minutes to the number. I'm kind of, oh, I know what I'm going to do. No, that won't be good. I was going to open it up on one of my upper monitors so that I could see the number come out. But I also want to watch the reaction over here. And I want to be able to switch back and forth to the screen, the stream, which I would not be able to do otherwise. Ooh. 3 minutes and 55 seconds. I'm so nervous. It's Christmas. Run around the corner and see those Christmas presents. We'll be able to see, I would think, without any question whatsoever, whether it's a beat or a miss or a no change, just by watching the market. Typically, that's the first line of information. Three minutes, 2.5. And this, no, it can't be a nothing burger. I was going to say this could be, it may, if the numbers come in as expected, then it may not have much impact here. And also, there's always a lot of people and traders, I think, put a lot more import on the call. You know, what's the guidance? What's all of that stuff? That's what they seem to place a lot of importance on. Makes sense. This number's history, right? What matters is going forward. It's like back testing. It's, you know, past performance is not indicative of future results. By golly. All right, so here we go. 1.5 minutes. Ooh. I'm so excited. Oh, they got a countdown going on here. Look at that. That's pretty cute. Here we go to 1 minute. Pretty soon. There we go, 1 minute. If I was really clever, I could probably have one of this up in the corner of something. I'll bet, I suppose. "30 seconds. Drum roll, please. I don't have any sound effect, drum roll sound effect on my mixer that I'm aware of. 10 seconds. And there we go. Nothing. No movement at all here. A little bit of a pop north. Nothing. The number's not out. Well, here, whoa, there you go. Now the newsreaders picked it up. Look at there. Still not making the wire here as far as the reporting services go that I have. Well, that's about useless as tits on a board, and then that's pretty stupid. It's whoa, look at that. Now this is, tell me how you manage this risk. You don't at all. That's a miss, boys and girls. That's exactly what that is. That is a miss. And let's see if I'm right. They're still not publishing it. Wow, that's incredible. They still haven't got it pushed out. I guess this is where they want you to pay. I guess this is the part where they want you to pay for the live thing, but look at that. Should be no question in your mind what happened right here. Out the bottom of the dam. Out the bottom. Should be no question. NASDAQ as well. Ooh, look at us go. Out the bottom of the deal. We got the NVPOC from the 26th, and we're looking down here at the at the naked volume point of control for the 26th. Yeah. Well, I'm glad I got that all captured here. See what happened here. There's no question about it. And NASDAQ. This is just a hiccup in the data trying to get processed so quickly. It's just the VWAP, doesn't matter. What counts is the Rincos. And over here we have the bar. We took out this one, which we had not touched all day. There was our high. We're gonna end up flatter or close or low. So if you were, if you were gambling your own account, tell me how you had a stop in that it didn't get wiped out up here. This was like the non-farm payroll, right? There's 5 points. What am I talking about? 10 points. 95 to 05. There's 10 points, 10 handles. And then a break, 95 to 60. Yeah, and you know what I didn't think to look at, but nice that it's on the screen and captured. Look at how the book thinned out. Remember, these were 30s, 40s, 100s, that kind of thing. Dropped down to next to nothing. And it'll be interesting to see if it really went dark. Wonder how long it's going to take these dorks to get those numbers out. Oh, there we go. I can safely say I don't know what the hell that means. Oh. It's a beat if you want to read this. 45.8, and I guess they didn't get as much as they wanted. And the projection, the forecast was for 1, and they got 1.04. $45.8, and they got 46.7, and the market didn't like it. How about that, huh? Take it. Here we go. Well, there you go. Are we looking at this? No, okay. Damn, sorry about that. If anybody's here, I don't think anybody is. Maybe. So here's the results. Gaming revenue, 4.3 billion, way up. Compute revenue, 33.8 billion, expected 33.5. Ah, that's the slip right there. That's the AI bullshit, if I'm not mistaken. H20 sales to China based on customers in Q2 or second quarter. No H2 sales to China. No H20 sales. That's their big chip that Mr. Tariffs monkeyed with. I don't know what it keeps doing here, but okay. I guess that's the reason for the big problem right there. I guess. Okay, well, there you go. That was pretty fun, huh? So what did we get? We got 95, say 60, so we got 25 handle dump. And they're recovering a little bit here. Well, that was kind of cool. I got all this captured here. So, yeah, this is fun, isn't it? But let this be a lesson if you're still floating around here at all. Just stop and ask yourself the question how you manage risk. Let's pretend you thought it was going to go up. And somehow you didn't take advantage of these. Oh, you thought it was going to go up and take out this other high over here, this all-time high. So what did you do? You got to put a long entry in here somewhere, and your stop was below it. You didn't get your target. And when this came through your price, if your stop was here, when this came through your price, you'd be really lucky to get filled before here. Basically 20 points lower than you thought. So that's a real important thing to remember. And I think I can officially now change this to what? I can change that to the fact that it's been traded over. How? And also I will now have a new RTH high up here at 65.05 half that I can put in my. We're getting closer to this one, right? I'm telling you, they're going to get this. They cannot stand to have the ETH people hold a level or a record, and they're going to jump over the top of here, even if it's by a tick. Maybe today, maybe tonight. Who the hell knows? They've got until 1600 to keep monkeying around here, don't forget. And I'll throw this in here just for the hell of it, because I got nothing better to do than stand here. I'm going to put that down. I think that's the ticker. What I do is typically encode the date, but I'm gonna get real tricky and encode the whole thing, and so I remember why that was, even though I will remember that. But okay, well, I figure that's enough stream. That's 7 hours and 30 minutes. I'll be back on at 0800 in the morning. Do something for yourself, your health. Remember that your health, your condition, your tilt, be hydrated, be well rested. All of those things improve your ability to think and react and trade. It's all really important. Have a great night, and please come back at 8 in the morning for the pre-market and enjoy this fun.